All right. Hello, everybody. Welcome back to another episode of the Market Open. Today is Monday, April 7th, 8:48 a.m. Eastern Standard Time. We are 5 days removed from the Liberation Day, April 2nd tariffs. We are 3 days removed from the 6% decline on the S&P 500 on Friday, which was worse than 9/11 in terms of S&P 500 performance and worse than the dot-com crash in terms of March 2000's performance for the stock market 25 years ago. And we are following up a Friday that was obviously very red. So far in the pre-markets, we are also very red. Now, we're not as red as we were last night on the futures. Last night, we were down about 4.5%. Right now, we're down about 2.9%. So if that's any bit of a bright line, there's your bright line. But obviously, it looks pretty aggressive, and it does not look pretty going into today. S&P 500 down 2.2% right there, 494.83. There's a lot we're going to analyze today, a lot we're going to discuss. In general, if you were there on the futures show last night, you saw these equity prices a lot worse than what they are right now. NVIDIA was down almost 9%. It's down 4.8%. AMD was down 7%. It's down 3%. Tesla was down like, I think 10% or 9.7%. Now it's down 5%. So pretty much everything is down about half or 75% of what it was last night, but it's not down similar to the 100% levels that of max pain that we saw last night. Now, maybe at 9:30 when the market opens up and we experience what Taiwan and Japan experienced last night, which were circuit breakers, aka the exchanges of those countries had to halt trading because of how much downside momentum there was and the speed at which that downside momentum came. Maybe we're going to experience that today. We're only 4% away from experiencing it, and obviously it can get pretty ugly. But if we don't, then maybe we're somewhat close to finding that elusive bottom. It's just, I hate even saying that, because unless we have any level of clarity by the Trump administration, and we got some updates last night that we'll talk about, if there is no clarity in the context of tariffs in regards to negotiations or deals that will be made to reverse the, in my opinion, absurd tariff rates that the Trump administration has imposed, then I don't see a need for the market to say, hey, it's time for us to slow down. So it is going to be quite an interesting week. We got a lot of data to look at. We got a lot of macro stuff. The Fed is not having an emergency meeting. That is fake news. I'm sorry that some of you guys fell for that. I almost fell for it as well. But this is a routine meeting. So the Fed has these types of meetings once every couple months. I know it's going around saying the Fed is having some emergency meeting on April 7th. That's not the case. The Fed always has these types of meetings. So do I wish the Fed was having an emergency meeting, which would lead to a rate cut? Kind of, but also kind of not, because I think that I think that, and we'll talk a lot more about it today. I don't think the Fed should cut rates. I think it's stupid for the Fed to cut rates right here. And I'll talk about why. But yeah, this is not an emergency meeting. I know that's the headline going around. It's just not true. It's not. This meeting was on the schedule before people found out about it today. So now, granted, in that closed board meeting, will they be talking about some of the stuff that's going on right now? Yeah, I think so. I think they're definitely going to talk about it. I really don't think it's going to result in an emergency rate cut. So, but why would they announce it? They didn't announce it. Every random account on Twitter decided to say it's an emergency Fed rate cut meeting. It's not. It's not. This was on the schedule. This was going to happen regardless of if the market's tanked on Friday or not. So yeah, it's not an emergency rate cut meeting. It's not an emergency meeting. It was a meeting that they always have before the FOMC. However, in this meeting, is it possible for them to discuss the probabilities of a emergency rate cut? Yeah, I'm pretty sure they're going to talk about it. I just do not think it's going to happen. And we'll talk about why I don't think it's going to happen. But I think everyone's grasping for straws right now, understandably so, because it is ugly in the equity markets right now. Rob, thank you for the $2 super chat. Amit, are we hitting a circuit breaker today? Well, circuit breakers come down every 7%. Right now, we're down about 3% on the S&P. Last night, it was down about 5%. So last night, we were much closer to a circuit breaker than right now. Again, at 9:30, we're going to actually see how the market opens up. Now we're down 1.9%. I mean, you're getting some green candles, some money stepping in. It's very low volume right now in the pre-market. So really, when the market opens, we're going to see how ugly this becomes. But yeah, I mean, theoretically a circuit breaker is possible. Also, this is how Friday started out. Friday, we didn't know it would gap down 6%. I think we were only down 2 or 3% in the pre-markets, and then by the end of the day, that extra 3% came. So obviously that could happen as well here today. All right, so we got a lot to talk about this morning. First of all, thank you everybody for being here. I know it is ugly. I know it's not fun. I know it's not pretty. I'm going through the same pain that everyone's going through. Last night on the Future Show, Steve and Kris spent about 2.5 hours with me discussing and kind of giving a better, giving different perspectives on what's going on right now. Their perspective was as follows. A, if you're young and you have time, meaning like you have at least another decade of compounding, then this is a dip that you buy. That's what Kris and Steve's opinion was. The people that are going to get hurt the most from this are people that are very close to retirement or retired and are living off their retirement accounts. And that is something that the Trump administration hopefully cares about. But as of now, they don't. And we'll talk about a bunch of different updates that came out last night proving how much they just don't care about that. But if you have at least 10 years left of compounding, you don't have to be 20 years old, but if you're like even 55 and you're planning to retire at 65, this still is a dip you buy because you have 10 years of letting that compound. However, having said that, Kris and Steve are also pretty worried that this is a man-made catastrophe by Trump. And on the bright side, it can be fixed by just reversing it. But if the ego is what it is, and we kind of know what Trump's ego is right now as well, then he's not going to want to fix it. He's going to want to go down with the ship, or he's going to want to blame someone else for not working. The 10-year right here above 4%, which is not good. This thing, we'll talk a lot about this 10-year today, but this thing should be below 4% like it was last night at 3.85. Right now, opening above 4% is not exactly the intention of what the administration wanted here. But the point is, Kris and Steve concluded last night, like, it's a dip to buy. In 5 years, it'll be seen as a blip, which I agree with. If you have time to compound, then you let your money compound. However, this could get a lot worse. 4,500, 4,400 on the S&P. Is that possible? Of course it's possible. If these tariffs end up being the tariffs that are deployed across the world, which I still don't think that's going to be the case, because I just can't believe a third grader math level of tariffs would actually be the ones that are implemented across the world. And I'm leaving that little bit of hope to say, all right, there's no way the administration can be that stupid. But if they are, then yeah, this dip is going to keep dipping. I don't think there is any reason for the market to bounce. I just don't think that, like, it, max pain, fear, yada, yada, all of that doesn't matter in the context of if we have these paradigm changing types of tariffs. I mean, the market's going to price in more inflation, less growth, higher cost of goods. And we're going to see equity valuations, which, by the way, the past 2 years of gains are now officially wiped out. The S&P 500 is at January 2022 levels. 2 years of gains wiped out in a week. The stock market giveth, the stock market taketh. But again, I don't think the I don't think the market is done dipping if these are the real tariffs that go forth. And based on all the evidence we have from last night, it seems like Trump really does want to implement these tariffs, which is why everyone's scared. And I can't blame anyone for being scared based on this being the outlook right now. So that's what Kris and Steve said. We had a lot of other stuff to analyze. I'm pulling up a ton of different pieces of analysis here that I want to show to everybody. But look, my takeaway from this is that it's ugly, and there's no way to sugarcoat it. It is ugly. Before we get into that, we got Peter Navarro on CNBC. Let me pull him up. Again, he's the White House that's been justifying a lot of this tariff stuff. Let's see what he has to say. And then we'll keep going from there. All right, here's Peter Navarro.
Being bear market territory, and I know you make the distinction between Main Street and Wall Street, but obviously they're interconnected. So to get the real story on how many countries are calling and on whether the president is actually agreeable is important, because we've heard all these countries are making the phone call, but then we hear that maybe the president isn't interested at this point. Can you clear that up?
Sure, Joe, but let me first take you back in a time capsule, because this feels a lot like the day after the election in 2016. And I don't know if you remember that day, but I was on the set with you. The futures were dead red down. And I made the prediction that the Dow would hit 25,000. And Andrew's head exploded. It's like, well, but you correctly pointed out that wasn't that heavy a lift. And we did hit that, not in 4 years, but in less than 2 years. And what I'm seeing, Joe, is a beautiful situation where we will hit 50,000 on the Dow, and we're going to have a broad-based recovery in the S&P 500. The market's trying to find its bottom now. The thing I would say to retail investors is don't get panicked out by all of this. And what the president could have added to that fine truth was the fact that the biggest tax cut in American history, the broadest base tax cut in American history, is coming within a matter of months. So any discussion of recession seems silly when you factor that in. Plus, the Fed is not going to do its job, but the long bond is doing it. We're lowering our oil prices, which is just amazing.
Right.
And here's the one other thing I want to say macro-wise, Joe, because look, this is all about people worried about global recession. That's what they're worried about. The restructuring that's going to happen, Joe, globally is going to start with China and Vietnam and Germany, heavily export-dependent countries. They're going to have to engage significant fiscal stimulus to reorient their economy. So that thing is going to go on. In the meantime,
Peter,
we're
they're
going to
much
boom
bigger.
here.
I think they're much bigger than most people thought. And I think from policy institutes on both sides of the aisle, the methodology that was used has been universally derided as being non-serious. I don't know whether you know exactly who came up with the formula, but it allowed you to at least characterize most of these countries as being their tariffs well above the reality of the situation, so that when you say that we're going to do half on them, it was much higher than anyone anticipated. And I think you'd have to concede that this was not the market reaction you were looking for. There's a way of maybe incrementally trying to accomplish some of the things that the president wants to do in a reasonable, serious way. And this just almost across the board has caused what you're seeing in the stock market and a lot of head scratching and head shaking on whether anyone really knows what they're doing in this case, Peter.
Right, well,
Can you at least acknowledge that?
Sure. No, I can't, because here's what I'm seeing. You throw a lot of stuff at me. First of all, the methodology was perfectly sound. It was done by the Council of Economic Advisors.
No, it wasn't. No, it wasn't. It was absolute bullshit. It was the methodology, that stupid formula they put out. And if you take it to its logical extreme, it comes down to the imports over the exports. It is completely an idiotic formula. The EU is not imposing 39% tariffs on us. It's just anyone who believes that is smoking something.
Based on long-term studies that are in the academic literature, and the people taking pot shots at us are the same people that always take pot shots.
The American Enterprise Institute, Peter.
Of course. Joe, come on. The American Enterprise Institute has been against
conservative. Larry Lindsay.
Let's not get buried down in those weeds now. You asked me a serious question. Was the president willing to negotiate? What we have here is a national emergency based on massive chronic trade deficits caused by systematically higher tariffs and non-tariff barriers. So when you ask if we're willing to negotiate, the president will always listen. But let's understand what the problem is. When you have a country like Vietnam, let's take Vietnam. When they come to us and say, we'll go to zero tariffs, that means nothing to us because it's the non-tariff cheating that matters. Let's do Vietnam, Joe. They sell us $15 for every $1 we sell them. About $5 of that 15 is China transshipping to Vietnam to evade their tariffs.
What
does Vietnam do? They dump into our markets, killing our shrimpers, our people who make metal brackets, kitchen cabinets, agricultural products. They engage in intellectual property theft. They have the biggest number of cases aside from China at the Department of Commerce on the dumping. So the point is, anybody who wants to come to talk to us about lowering your non-tariff barriers. Vietnam has a 10% VAT. Europe has a 19% VAT. We can't compete against that. We have tried at the World Trade Organization to get, Andrew, let me just make this point. We have tried at the World Trade Organization since the 1970s to get VAT tax relief, and they've told us no every single time. We've won case after case at the World Trade Organization on things like our agricultural products, pork, beef, and other and corn.
Peter,
and they
I think
just
the
blow
thing
us
we're all
off.
trying to understand is then if there are going to be negotiations and you're saying zero is not enough, what is enough?
Zero is a small first start. Okay.
Okay. So,
What is
but
enough?
then what is enough? And let me
Okay.
ask you, but related to that.
But let me answer that question. Let me answer. Let's take them one at a time. We got plenty of time. So what is enough? Okay. You take any given country, they're like fingerprints. They all cheat us in a different way. So here are the things they cheat us on. Some of them engage in currency manipulation. Some of them have a hefty VAT tax. All of them dump into our markets. All of them engage in heavy export subsidies and government subsidies. All of them put up these phony technical and phytosanitary barriers to our ag products and our autos and everything in between. Many of them steal our intellectual property. A lot of them run sweatshop labor, including forced child labor. They have pollution havens. So when you say to me, Ed, what do we want from them? We want fairness. We don't want them to kill American workers by inundating us with this non-tariff cheating. And it would be really refreshing to have the media talk more about that. This zero tariff thing, it's a misdirection. No, it's a misdirection. It's the non-tariff barriers.
What that suggests is that there's going to be a lot bigger challenge in terms of actually then getting to yes, if you will, or finding the off-ramp where a deal is made, given that we're not just talking about getting to zero, we're talking about getting all sorts of other policies inside each of these countries changed. Yeah. My related question, I don't know, maybe they're related, is you have talked a lot about how tariffs, and the president's talked a lot about how tariffs can be helpful as a tax, effectively, as a way to raise revenue here in the United States.
Tariffs are tariffs, and they do raise revenues. They will. I see them as a tax cut, Andrew, because they're going to help pay for the biggest tax cut in American history. Every dollar that we extract from foreigners who are cheating us is going to go to the American public in the form of debt reduction and tax cuts, including, for example, in our auto industry. Anybody who buys an American-made car is going to get a healthy tax cut. We were given $7,500 away for EVs made partly in China. That's crazy. If Donald Trump gives away money for American-made cars made in Akron and Flint and Detroit, that's gets our manufacturing base back.
Just stick with me though for a second.
Sure.
Either we can collect those revenues, and by the way, there's other people who think it'll be a tax on the American people, but let's just put that aside and assume that you can collect revenues. Either you're collecting revenues and that's the goal, or you're negotiating with these countries to get to not just zero, it sounds like anymore, but something very different than that. But those two goals seem to be at odds with each other.
Not if you look at it as a movie rather than a snapshot, Andrew. The goal here ultimately is to have people make things here. Remember, the president has said early and often.
But again, if that's the goal.
Let me finish the thought, Andrew. Sorry. Why are you interrupting? Okay. Let me just finish the thought. The president has said early and often that the best way to avoid tariffs is to just come here and produce. I mean, if you look at our auto industry, right? We're an assembly line for German engines and transmissions right now. That just doesn't make any sense. In World War II, we won that war with our so-called arsenal of democracy. We can't do that anymore. We've got parts all spread all around the globe.
You know, it was fun being rich. It really was fun. I mean, I enjoyed it. It was a different lifestyle. You know, Saratoga water, manicure, pedicures. Got to theorize intellectually about where asset prices might go in the future. It was really fun being rich. Like I enjoyed it, and I want to get back there one day. But I feel like I've been poor my whole life. I feel like I need to get back to that. I feel like sometimes you just got to go back to the basics. The level of ambition that I had when I was broke, I think I've been missing it. And you know, sometimes life has to tell you to further chase your ambitions and not get complacent. And so maybe this is all just to remember what it's like being broke, because it was fun being rich, dude. It really was fun. Like, it was a great time. Yeah, we had alcoholic mocktails. I mean, like, it was just, it was great. We're rich. We're having fun. We're living life. Don't have to worry about $30 manicures. But, sometimes, maybe we have to go back to the basics. Look, in all seriousness, this is ridiculous. What Andrew Ross Sorkin just asked was a question that he probably has no answer to, which is, and this is the part that's been bugging me all weekend. I've been thinking about stocks all weekend, by the way. I don't know about anyone else, but for the past 48 hours, I've been thinking about stocks because it's becoming very obvious that this can get very ugly. The question he asked was, wait a second. Are you guys trying to raise money from these tariffs to pay for this big ass tax cut that you guys are trying to get passed right now? Which logically at least would make sense. There's some way to pay for it if there's going to be a massive tax cut. Or are you trying to negotiate and get deals? And then these deals would then create better trade incentives, better trade relationships, even if they're not 0% tariff rates, but there's some type of trade deals that you would lock in with Vietnam, Thailand, whatever, to become more fair to the United States. And Navarro doesn't really know what to say, because if you're not trying to raise the tax revenue, you're trying to get deals done. How are you going to pay for the tax cuts? And if you are trying to raise the tax revenue, then why are you saying you're open to negotiate? Because you're not open to negotiate, because obviously no deals are going to be good enough for you to withstand the potential $600 billion that you might be raising from the External Revenue Service. So to me, this is a hodgepodge of a mess. And unfortunately, we have seen some of the biggest Wall Street leaders over the weekend lose their freaking minds, aka Bill Ackman, because even he, who should have been enjoying his weekend, multi-billionaire, realized on Saturday night that, wait a second, if Trump does not reverse course, then everything goes to shit. Everything goes to shit. He says the risk of not doing so, aka reversing, is that the massive increase in uncertainty drives the economy into a recession, potentially a severe one. And then if you look at what Bill Ackman tweeted last night, which was he was absolutely losing his mind at one point, even though I think he has a point. He tweeted at 10 p.m. when futures were down, I think about 5%. I just figured out why Howard Lutnick is indifferent to the stock market. He and Cantor Fitzgerald being his firm, are long bonds. He profits when our economy implodes. It's a bad idea to pick a Secretary of Commerce whose firm is levered long fixed income. It is an irreconcilable conflict of interest. The fact that freaking Bill Ackman is calling out Howard Lutnick as having a conflict of interest as the Commerce Secretary, he then apologized about it this morning. He probably realized that wasn't the right thing to say. But nonetheless, I mean, you do have an argument, right? If Cantor really is long bonds, Stanley Druckenmiller, the opposite, he's actually short bonds, so he's losing in this situation. But if Cantor is long bonds and the economy is crashing, that's great for Cantor. Bill Ackman says right here, I am just frustrated watching what I believe to be a major policy error occur after our country and the president have been making huge economic progress that is now at risk due to tariffs. I would love to be proven wrong and watch this approach to tariffs and or the resolution be enormously beneficial to our country and the global economy. And then he apologized to Howard Lutnick. I do think that was a little extreme last night to be able to call out Howard Lutnick that aggressively, because he was an avid supporter of Lutnick a couple months ago, right? So if you're going to call him out like that, you better have some hard evidence or some proof about how bad this is. But it goes to show how upset Ackman is with what's going on with the economy. And it's not just Ackman. I've seen a lot of Wall Street people tweet over the weekend about how aggressive. A lot of people in Silicon Valley and tech that don't even have public companies are tweeting about this because they're seeing the impacts on their supply chains. Even Vlad tweeted, the greatest thing about tariffs is that they can be modified or removed as quickly as they were introduced. Basically implying, hey, we can turn the ship around. It's not a global pandemic where the world's shutting down for the next couple months. We can just not impose these tariffs. But obviously, this is the route that Trump wants to go, and that's why it's been so bad. So look, my opinion on this right now is that this administration has no idea what they're doing. So for all the people that called me MAGA Amit, I hope this is a little bit of objectivity here, because look, for the past week, ever since I saw those results, those tariffs on April 2nd, I decided that this was idiotic. And look, if he pulls it off, I'll say, yeah, great. Look, Trump pulled it off. We should praise him. But the odds of him pulling this off, and we're going to talk about kind of the nuanced line he's walking to try to pull it off, I think you have to be very either self-motivated to support this policy by Trump, or you have to be delusional, maybe is a better word, to support this. I mean, like, this is my opinion. And look, maybe I'll be wrong. Maybe in 2 months it'll all be fixed and I'll be wrong. But if it is fixed in 2 months, if it is that quick, and we get back the couple years worth of gains we lost in the past 3 days, I think it won't be because this worked. I think it'll be because there's a reversal on policy. Because this working essentially means we're going to be raising hundreds of billions of dollars in tariff revenues, which is cool. But what is the byproduct of that? Because there will be side effects, either on taxes inside of the United States, either on growth, either on cost of goods, either on inflation, either on rates, etc. And so if this ends up working, quote unquote, there will be a side effect that we have to learn how to deal with. We just don't know what those side effects necessarily are going to be. I think the more likely scenario is that at some point the market falls to such a degree that Trump realizes he has to reverse. He's not going to apologize. He's going to blame someone else. And then when someone else gets blamed, they'll be the person who takes the pain for it. If all of this just has to deal with negotiations, right? All of this hoopla, all of this elimination of wealth, $10 trillion is purely based so that we could get a slightly better deal with some of these countries, then I think this was the most insane foreign policy that we ever dealt with. But that's what the president feels. And if that's the case, then I guess this is the route we are going down. Here's what Trump had to say last night on Air Force One about these tariffs as well.
Has spoken when they look at the fact that we have $1 billion trade deficit. When you look at the trade deficit that we have with certain countries, way over $1 billion per country. But with China, it's $1 trillion. And we have to solve our trade deficit with China. We have $1 trillion trade deficit with China. Hundreds of billions of dollars a year we lose with China. And unless we solve that problem, I'm not going to make a deal. Now, I'm willing to deal with China, but they have to solve their surplus. We have a tremendous deficit problem with China. They have a surplus of at least $1 trillion a year. I think it's like $1.1 trillion. And I want that solved. And no other president's taken it on. I had to take it on the last time that we had a rigged election. No other president's taken it on. And so China is, they say the market's spoken. China is right now taking a big hit because everyone knows we're right. They have to pay tariffs because otherwise we have a surplus and they have a surplus with us that is not sustainable.
Mr. President.
And we're talking about $1 trillion. You know that, right?
Along with that, Trump just tweeted this morning, the United States has a chance to do something that should have been done decades ago. Don't be weak. Don't be stupid. Don't be a panican. A new party based on weak and stupid people. Be strong, courageous, and patient, and greatness will be the result. Look, here's my thing. I don't think anyone has a problem with tariffs. The issue was never tariffs. The issue was never that you can't impose tariffs or reciprocal tariffs. The issue was this insane third grade math they did to come up with China and the EU and all these countries are tariffing us 40, 50, 60%. Therefore, we have to go a similar route against them. And again, in April 9th, we have 2 days left until it gets implemented. I still have some level of hope that those rates are so unbelievably egregious that they won't actually go into effect. But the market can't have that same hope because the market can only react to what they're seeing in real time. And what they saw was 30% against South Africa for no reason. And as a result, they're saying, okay, a lot of companies do business in South Africa. That's probably not going to be the best for their revenues. We should take down some of our estimates. And as a result, the stock market has declined. And so I'm not saying that China isn't an issue. I'm not saying that the EU is not an issue. Obviously, I think people philosophically can agree with this kind of core argument around tariffs that Trump is making, even if you don't like the guy. But the approach, I think that's the only issue that even some of his most avid supporters, like a Bill Ackman, has. We got about 13 minutes till the market opens. S&P 500 down about 2.7%. The approach by which he's gone about implementing these tariffs, or these quote unquote reciprocal tariffs, Bitcoin right there just holding on to 77,000, is the issue. And I think that's the problem. I think that is the current problem right now. And that's why the market's upset. That's why we're obviously seeing this decline in equity prices. Now, another thing I think we need to talk about is what is the Fed going to do? So we talked about this a lot last night, but I'll give my thoughts here. First of all, for those that are joining, thank you for being here. The Fed is not having an emergency meeting today. The Fed is having a regularly scheduled meeting on April 7th. People are framing it as an emergency meeting. That is fake news. That is not an emergency meeting. It is a regular meeting. Will they be talking about maybe taking an emergency decision? Maybe. That could happen today, but it's not a quote unquote emergency meeting. Now, what do I think is going to happen with the Fed? I don't think the Fed is cutting rates. I don't think the Fed is cutting rates because tariffs are inflationary. And if you don't think tariffs are inflationary, that's fine. The Fed's perception of tariffs, which Jay Powell has said multiple times in the past couple of weeks, is that tariffs will create inflation that is quote unquote transitory, implying that he believes that tariffs are inflationary. If tariffs are inflationary, and let's say April 9th happens in 2 days, and we get the certain types of tariffs that we got that were announced on April 2nd, which is, again, these ridiculous rates against all these different countries. There is no way in hell Jay Powell says, oh, wow, we're tariffing South Africa 30%. Yeah, we should put on, we should cut rates by 50 bips. Because all those tariffs will create inflation. And if that's not even exactly true, the perception of the Fed will be that these tariffs, because they're looking at what happened in 2018, will also create inflation. If Jay Powell stimulates the economy by cutting rates when the labor market is as good as it is right now, we added 228,000 jobs and we're barely losing 200,000 jobs a week. A recession is more 375,000 jobs lost a week, and negative hiring, we're adding 200,000 jobs a month right now. There's no way in hell you could justify lighting flame on the fire of a strong labor market, inflation that's sticky, went from 2.4 to 2.8 over the past 5 months, and tariffs that are now more inflationary. You can't cut rates in that scenario. It's just not possible. Unless Jay Powell says, screw the whole 2% target that they've been basically like glued to for the past couple of years now, which I don't think is going to happen. The way Jerome Powell cuts rates, it's very simple. We need a recession. We need massive unemployment. We need a lot of pain. We get that pain, you get unemployment, and then Trump will say, oh, look, even though people are losing their jobs, at least the Fed is cutting rates, because he's already bragging about the fact that the 10 years gone from 4.5 to 4%, and mortgage rates have gone from 6.7 to 6.5. So he'll use that as an opportunity to overlook the pain of the recession, maybe frame that as a detox. If millions of people lose their jobs, I don't know if that's a detox, and look towards interest rates going lower. But that is the only logical argument I have in my mind for why Powell would cut rates. And it's not my assumption. He quite literally said everything that I'm saying on Friday when he spoke for 40 minutes. And he basically said, yeah, we're probably not going to be cutting because of the uncertainty of tariffs and how inflationary they can be. And so for everyone thinking the Fed's going to come and save us, they don't have the ability to save us. I don't know how they would save us. I don't know in what world can they come out and say, yes, like this is the route we go to help people. It's more so a question of them caring about employment versus inflation, but employment is not showing the downstream effects. Now, maybe they do a preemptive cut because they think the tariffs are going to create so much inflation, or not inflation, job loss and unemployment, because Facebook's going to have to fire 5,000 people because their margins are getting compressed, whatever. Like, yeah, maybe preemptively they cut, but that would mean the Fed has to be that would mean the Fed has to be early to a problem before being reactionary and late. And historically, and we saw this in 2021, they're usually late. So I don't have enough faith that they're going to come in right on time. Oil is down another 2% right now. This is another thing that Trump's going to be bragging about, getting oil into that $60 range, potentially below 60. 55 to 60 is the sweet spot that he wants to get it at. The 10-year not really coming down as aggressively as he wanted it to come down. So now let's talk about the 10-year, because here's another issue that we're dealing with. If the Fed, or not the Fed, if Besant, Lutnick, and Trump are hell-bent on this 10-year coming down to refinance debt, so they probably want it to at least 3.5%, then this might be another reason why they just don't care about the stock market. Because part of the reason why this is above 4% right now is because stocks are not as bad as they were last night. Like the S&P was down almost 5% last night. The S&P right now is down 2.64, which is probably having a correlation with the 10-year not being as aggressive as it was last night. If Trump wants the 10-year down to 3.2, 3.5, I don't see how we don't get something like 4,650, 4,700 on the S&P. If we need the correlation of the stock market being down, because people sell stocks, they buy bonds when they get that scared, if Jay Powell's not cutting rates, Which is another thing that I think Bill Ackman realized over the weekend, which is like, wait a second, holy crap. Like, if they're going to refinance the debt and that's the only thing they care about and they don't care about the stock market, we've got lower to go. And unfortunately, now it's becoming clear to everyone. But if that's the case, then obviously markets have more to get hit. And why do I think they don't care about the stock market? Well, here's Scott Bessent talking about the stock market over the weekend.
The people who are hoping that yesterday's move will lead to a demonstrably brighter future within 4 years, is it your sincere prediction that within 4 years we'll say, actually, that kind of worked?
I believe that it's going to work. And I know that what we were doing wasn't working.
Yes.
So I think we have to try this. And I have a high confidence ratio it's going to work. And I have a very high confidence ratio. The good news is we have President Trump's previous term when everyone said none of this was going to work. Oh, the China tariffs are going to do this. They're going to cause inflation. They didn't. This is going to happen to working class. It's going to be bad for working class Americans. Well, guess what? Working class Americans, the hourly workers did better than supervisory workers. The bottom 50% of households, their net worth increased faster than the top 10% of households. And look, I'm not happy with what's going on in the market today, but the distribution of equities across households, the top 10% of Americans own 88% of equities, 88% of the stock market. The next 40% owns 12% of the stock market. The bottom 50 has debt. They have credit card bills. They rent their homes. They have auto loans, and we've got to give them some relief.
I think there's a lot of problems with what he just said. So first of all, is he wrong about the statistics on who owns the majority of the stock market versus the bottom 50% of the country? No. But the idea that we destroy the stock market to give relief to those bottom 50%, which in my opinion, he didn't explicitly say it, but what that means is destroy the stock market, get rates to come down. Therefore, interest rates are lower for the bottom 50%. So credit card rates, auto loans, mortgages, et cetera, everything gets cheaper. If that's the plan, then, I mean, the conclusion for all of us as investors is that they are hell-bent on not caring about people that own assets in this country. They care about the bottom 50%, that in their opinion, we need to destroy the asset market, the stock market, in order to help. I don't know if that's the correct form of thinking. Second of all, and this is a theory that they've been touting, Bessent in particular, about how the rich have gotten richer. And if you bought NVIDIA at $20, when it got to $150, you've done very well. But that random dude across the street didn't get a chance to buy NVIDIA at 20. And therefore, now that the stock market's falling and NVIDIA is down almost 50%, that person will have the chance to buy NVIDIA. I just think that logic is asinine. I don't think it makes sense. I mean, like, if you're a billionaire and you lose $1 billion in the market, you probably have enough disposable income, enough assets on the side where you can buy the dip and you can become even more rich buying NVIDIA down 40%, right? Like when we talk about the rich get richer, we talk about people that have money ready to allocate and deploy when things are really bad, which tend to be people that are already pretty wealthy. If you're an average person who saved up your first 100 grand, you put it into the markets, you put it into NVIDIA a couple years ago, that 100 turns into like 350. And now that 350 is at 150. That is not helping anybody. That is not somehow taking from the rich and giving to the poor, which is what Trump thinks he's doing in a video that he reposted on Truth Social last week. That is just saying the average American that took a shot on the stock market, this like unknown thing that they said, all right, I'm finally going to get into it. And they're seeing 3 to 4 years of gains just be destroyed within days of a absurd tariff policy in the hopes of, oh, if you didn't own assets, well, now's your shot because you can own assets, is insane. Mind you, most Americans don't have $500 in an emergency savings account. You think they're going to buy the dip on NVIDIA? Like the idea that regular people that didn't get a chance to buy NVIDIA or Palantir when it was at its lows are going to just get into the market is insane, because no one wants to buy in the lows. Who wants to buy into the scam that is the stock market, which is what it's going to be seen as until we get a little bit of recovery? Like, that entire idea makes no sense to me. The concept of tanking the market to save the 10-year, maybe that's, you know, what somewhat could be justified if you think that interest rates getting lower are going to be strong enough. It's just that you're playing a dirty game with a recession right here. And if you cause a recession, I don't think it matters if rates come down because everyone's poor. Everyone's losing their job at that point. And so this entire system and structure of how they've justified what they're doing to me, I don't know. I'm not buying it, guys. I'm not buying it. And I would love to be proven wrong. I agree with what Bill Ackman said today on Twitter. Like, I would love to be proven wrong. I would love to be like, nope, it was Trump. He had a master plan. He figured it out. Even I doubted him. I was wrong for doubting him. Yada, yada, yada. I'll kiss the ring, whatever. When you put the pieces together to the puzzle, it doesn't seem like this theory makes a lot of sense on any angle. And I'm not even against tariffs. You can have the freaking tariffs. You can have different ways to navigate this. It's just the way he's gone about this is starting not to make any sense. So, in the next 2 minutes, we will continue what happens at 9:30 in about 45 seconds. This will be a continuation of the past 2 days in terms of the volatility that we've seen. The stock market, again, on Friday, just to give everyone some context of how bad it was worse than 9/11 in the dot-com bubble. Like, that's how bad that Friday crash was. And I think that is emblematic of the fact that 9/11, pandemic, all that. I mean, that stuff was kind of out of our control. This thing was self-imposed and self-inflicted. And as a result of it, that's why I think so many people are mad. I don't think people are mad that their stocks are down. People can handle their stocks going down. I think people are mad that their stocks are down for what seems like an idiotic reason compared to all the other moments where we had a 6% drop in one day. And that's why you're seeing the pain that we are seeing right now. All right, here we go. Another day in the casino, 9:30 a.m. Monday, April 7th. The stock market is now open. Wake your ass up. Let's get into it. S&P 500, 489. 489. Who would have thought a four handle, huh? A freaking four handle on the S&P. In January of 2022, we topped out at 478. So we are just a bit above that January 2022 top before we had the decline for 2022. But we are back under 500 for the first time since April of 2024 on the S&P 500, down 3.35%. SoFi is down 8%. Alibaba, China's not getting any safety either. I mean, they are also getting hit, down about 8%. Celsius down 4%. Tesla down 7%, 222. AMD down 6%. Nvidia below 90, $88, down 6.5%. Google 142. This was 137 last night. That's down 2.2%. Robinhood below 30, 29.80. That's down 13.8%. Coinbase 146. That's down 8%. Berkshire Hathaway also getting hit. That's down 5%. The Qs 407, that's down 3.5. Palantir, down 8%. This thing was, I think, at 65 last night in the overnight markets. It was down about 11%. Right now, down 7.8%. Palantir, 68.18. Nike is down 5%. Rocket Company's down 1%. The S&P 500, again, down 3.35%. Verizon, down 2%. Carnival Cruise, the cruise lines are factoring in that cruises might not be the vacation of choice in a recession. Those are down 8%. Costco is down 3%. Snapchat's down 3%. Grab is down 5%. Venture Global is down 6%. Nubank is down 3%. SMCI down 3%. TLT is down today, which is not good. The one thing that should be green is TLT because rates should be coming down. The fact that TLT is down 1% means rates are actually up compared to where they were on Friday or on in futures last night, which was implying a 3.8 open. Right now we're at 4%. So futures not matching up with the reality right now in the context of the 10-year. JP Morgan down 3%, Bank of America down 1%, Broadcom down 3%, Micron down 3%, Shopify down another 6% after being down 18% on Friday. $10 trillion of value in the stock market has been eliminated. I guess the updated number is probably a little bit more than 10 trillion. Based on these further declines. Lululemon down 3%, Block down 7%, PayPal back below 60, down 3%, Google down 2%, Uber down 3%. Uber basically at Bill Ackman's average right here at around 62. Reddit down another 7%. at 80 bucks. StubHub and Klarna have delayed their IPOs. It looks like no one is going to go public in this environment, which who could blame you? CoreWeave right here down 7%. Microsoft down 2.82%. Microsoft right now at 350. Let's look at the Mag 7. The Mag 7, Apple 176 down 6%. China tariffs not going to be good. Meta 487 down 3%. Microsoft 349 down 3%. Google 144 down 2%. Nvidia 88. Tesla 222 down 7. Amazon 160 freaking 5 down 3% currently right now. It's ugly. It's really, really, really ugly. And it's not looking like it's getting better anytime soon. Crypto also getting hit pretty badly. CleanSpark, Coinbase, Bitcoin. We thought it could, there was some element of, hey, maybe Bitcoin actually turns into a hedge, given it was still stuck at 84,000 on Friday. Well, Bitcoin's at 76. So that one has completely gotten hit as well. Europe is also getting hit. So Europe got hit pretty badly last night in the futures, and I believe that has continued currently right now. So VGK, which is the European ETF, that's down 3%, 3.6. So Europe's getting hit. China is down 6%. They were down 10% overnight. Japan and Taiwan had circuit breakers. They weren't even able to finish trading yesterday. Trading was halted. So TSM, I think, was down 10% right now. TSM is down 6.2%. It's not as bad as it was last night when it was like completely, S&P was down 5%, etc. But obviously it's still pretty red. Nvidia down 6%, AMD down 6%, SMCI down 5%, Intel down 5%, Intel back to $18. That's just that tangible book value. ARM is at down 5%, Dell's down 4%, ASML's down 3%, Broadcom's down 3%, Qualcomm's down 3%. TSM's down 6%. I mean, prices you thought just were not going to happen, like TSM at 137 when it was floating around 225. I mean, prices that no one could see realistically happening, barring any major economic cataclysmic catastrophe, are here, as the Dow Jones is down 1,200 points on the open because of tariffs. That's it. It's because of tariffs. And I think that's why money managers, Wall Street investors, that's why everyone's pissed off. Because if you've been someone who's been paid to give advice to your clients, and your clients have made a lot of money over the past couple of years, and those gains just wiped out within 3 days because of tariffs, which theoretically, could you have really told your clients to sell because of the tariffs? It's kind of unfair to tell someone like immediately sell on April 2nd because they had no idea what tariffs were going to be like. But then again, if you're getting paid to give advice to a lot of wealthy, high net worth individuals, the assumption is that you're supposed to be an oracle around the stock market and see this stuff coming. And no one realistically saw this. I mean, most of the money managers and Wall Street investors, no, they didn't see this coming, or else they would have got out a long time ago. And that's what I think everyone is so pissed off about, that this was the most predictable yet not predictable crash that happened. And everyone has to deal with the fact that it's the pain of realizing that equities now have a long way to recover. I do think if Trump changes course, the recovery will be just as violent. I will say that. Because some of these prices are just idiotic, right? S&P about to go down 4%. We're getting 0 green candles on the S&P. But I think a lot of these, like SoFi should not be at $8. There's so many of these names that are just egregious. But you're going to need a massive reversal, and you're going to need a reversal backed by a president that's ready to reverse, which every indication is giving us that's not the case. Yeah, Buffett knew. Buffett's seen it from a mile away. That's correct. You got to give credit to Mr. Buffett right here. For everyone who takes shots at him, he's been holding on to $300 billion in cash. I actually shared an interview last night from 2 months ago of him saying that tariffs are an act of war. And he didn't support Trump or Harris during the election. He probably realized when Trump won that if tariffs are the policy, that he should just stay put. And it worked, because right now he's staying put. Gerstner also called it. Yeah, but Gerstner started buying last week. I mean, even Gerstner feels that we are getting close to a bottom. Now, technically, you can't literally time the bottom, right? So I get it. So I wonder if he's still buying. What I'm really curious about is if you're a big money manager, right, and you bought the dip a week ago or 2 weeks ago, has the narrative changed to such an extent that Apple at 177 isn't a dip anymore because you're waiting for Apple at 150, and you think there's a real shot based on the fact that we haven't even had earnings guidance yet, which we might not get any earnings guidance from these companies based on tariffs, that Apple actually gets to 150 again? or Google gets to 100, or Meta gets back to 400, right? It's at 487 right. Like, I wonder how capital allocators are really thinking of a bottoming process that is inevitable before April 9th, or that needs to happen between the next couple weeks when these deals are implemented and maybe some negotiations happen. Or are they thinking Trump is the Joker? He is going to burn everything down and laugh about it in order to get his agenda across, which is refinancing debt and not necessarily caring about the stock market, which, again, he has made it evidently clear time and time again that the stock market is not their concern. If that's the case, where's the momentum to buy equities right now? Or where's the excitement, I guess, for people to buy in? I think that's the biggest question. Call it copium, but I think the way Trump is acting, there's got to be a weird master plan. Like, he is acting too like someone who doesn't know what they're doing for no reason. I've tried to convince myself there is a master plan. I don't know if there is. I mean, the White House officials will have you believe that there has to be some master plan, that this is all going to work out. But dude, again, like, for a lot of us that have decades left of compounding, you buy the dip and shut up, and this will be something you laugh about 10 years from now. But my heart goes for the people that were ready to retire and like had really trusted the stock market over the past couple of years, more than real estate, more than crypto. They trusted equities. They trusted great American companies like a Palantir, like an NVIDIA, like a Google, like a Meta, like a Rocket Lab, like a QQQ, right? The index of technology in this country, and one of the greatest revolutions we are seeing of all time, which is AI. They took a shot with hard-earned capital that they saved up for years and years and years of working, and within days, it's gone, at least for now. That to me is the saddest part about all this, because you have to really ask yourself then, are you ready to retire when something like this happens? And if you're getting up to that age, but you don't think you have the economic foundation to sustain it based on this drawdown, like, that's the part that I think is the hardest to deal with. And that's why when the administration says, people shouldn't look at their day-to-day accounts, they should be more long-term, it's like, I think they're forgetting that the baby boomers are the ones that have built up a lot of this wealth in the stock market, and they're the ones that are finally getting ready to retire. And this is not how they wanted to retire. Where is Newsmax? Where is Newsmax right now? Newsmax is green somehow. Dude, we didn't realize, I guess I didn't notice, but on Friday, Fartcoin was green. And of course, Fartcoin is green right now. like is it this bad that everyone decided, screw it, screw stocks, I'm going to crypto? Like, we're going to Fartcoin right now when Nvidia's down 50%. Like, really? This is this is just, I don't know what to say. And this, this makes me feel this economy is still wonky, because this is not like, this should be the first thing that's getting absolutely demolished, but it's not. It's a super risk on asset that has no value at all. And a Newsmax, which has value because it's a company, but I mean, it's still up 400% from IPO. These are not getting hit. This is what kind of gives me a little bit of hope that, like, the market is trying to find its bottom if you have some level of risk on assets going up. But then again, you see the S&P 500 down a new low for the day, 4.05%. Maybe it's just people that are so afraid of stocks, they're going to random meme coins. And maybe that's what explains it, but it is ugly. It is very, very, very ugly right now. I mean, what are you doing with your equity holdings? Are you selling? No, I'm not selling. I mean, look, like, does it make sense to sell NVIDIA now at 85? Like, not really. Does it make sense to sell Robinhood at 30? No. Palantir has been a no touch for me. I didn't sell at 125. I'm not selling at 60. I don't care if it goes back to my average at 25. Like, I'm not selling that. So that's never been a question for me. But my point is just, like, I don't think if we've gone through this level of a drawdown that now selling makes sense, unless, but I can't blame anyone who's selling here, because if you do think these are the tariffs that go into effect, 4,000 on the S&P, right? I'm not saying that's going to happen. I'm just saying, like, if that is the result of what we're getting, and we'll read some of the equity reports that came out this morning from Goldman Sachs and JP Morgan that think that, yeah, that is a possibility. I can't blame anyone for trying to protect some of their capital and selling right now. But I think if you don't need the money and you've already held on for this type of a drawdown, I mean, if you want to sell, then you want to sell. But I also think the risk of selling near a bottom is high, even though I understand why people think this might not be a bottom. S&P 500, 483.15. Folks, we were down 4.39%. 4.39%. So just to give you guys some context, here's a stat that I think says something about the markets right now. The last time we had 4% back-to-back down days on the S&P 500 was during the Great Depression. Right now, if it was 4 p.m., we would have 3 back-to-back down 4% days, Thursday, Friday, Monday. And it would equivocate to the Great freaking Depression. I mean, look, I'm a little depressed right now, but I don't think the world is in the Great Depression type of economy. I think this is just one guy who's hell-bent on tariffs. And for that to be equal to the, I mean, and so here's my thing. For everyone saying, oh, the market's overreacting, I don't think you can be cocky enough or arrogant enough to say, oh, something similar to the Great Depression in the stock market right now is just the market being a little emotional. Like, that is obviously the market saying, hey, we really don't like this policy. And we really don't think this is going to play out the right way. And the market is what? It's a machine to weigh and measure the risks of fiscal policy, monetary policy, decisions, geopolitical events, all this stuff. It's telling you right now it doesn't think this is the right route. And the hard thing about that is you don't know where that bottom, like, once we kind of found some conclusion to historical events, you bottom. And it's hard to find that bottom, but you bottom and you move forward. Right now, it looks like the bottom's falling out because what is the conclusion to this tariff event? Well, the conclusion is that Trump's doubling down based on what he said last night, based on what he said this morning. Tesla right here, back to March 13th lows. And on top of all that, in 2 weeks, you've got earnings coming up. And on earnings, I doubt we're going to get any good news around what the quarter looks like. Q2 already looks like it's screwed. Even if Trump were to reverse everything that he said today, Q2 looks like it's messed up already because of consumer confidence, because of supply chains, because of a variety of things that have gone into effect already that would have to be reversed overnight, which is not going to happen. So, like, I mean, the bull case is that there is a unequivocal reprimandment of all these different tariffs that were unveiled, and then we start over, which, although Trump would have to take an L on that publicly, I think people would be at least happy to have some level of, all right, we're moving forward. But that's probably not going to happen. And that's why it's really, really ugly right now. Amit, if you had 100K to invest right now, which stock do you believe would rebound the strongest when the market turns bullish? Okay, so I think that's a question for everybody. If you had 100,000 right now, what would your strategy be of dry powder in terms of deploying it? I don't think I would do one stock. I think there's so many opportunities right here. I would probably split 20 grand into 5 different stocks. I mean, the Qs, I think I would have to buy the Qs. I think tech is discounted. Obviously, tech could get more discounted, but I think I would buy the Qs. I would obviously buy Hood. Nvidia, I believe in that growth story. I think that's solid. I think also just the S&P, like, you don't have to get too fancy about it. The S&P should be a little bit more safer with the rebound. I would also really wait until earnings to, like, I love Meta below 500, but then again, you know, if Meta's going below 400 because it's going to get that bad, then obviously I would be a little bit patient there as well. But I think after earnings, we'll have a much better understanding of how bad the effects of the tariffs are. And then if you've got a lot of dry powder, it makes more sense to deploy. I don't blame anyone for taking a nibble here, nor do I blame you if you took a nibble on Thursday or Friday. But if the tariffs go into effect, the market is obviously telling us that they are not happy with how this is playing out. S&P 500 right here, 3.84%, little recovery from down 4.5 to now down 3.9. The Qs also down 3.96. They were down at 402, now at 406. Meta as well, small green candles, very, very, very small green candles kind of popping up. We're about 20 minutes into the market open. We'll see if those sustain themselves. We had those on Friday as well. Then we gap down even lower by the end of the day. So we'll see how bad this ends up going down. Yeah, I've seen people have been talking about TQQQ as well. I don't hate that given how down it is, but the one reason I would stay away from it or anything leveraged is because, again, it's leveraged and you need the underlying to have a real reversal for the leverage to actually matter on something like an NVDL or ROBN or a TQQQ. I don't know. I would play it safer and just buy amazing companies that are discounted heavily versus trying to get fancy with it. Same thing with options. I mean, like, look, yeah, leaps are very cheap right now, but do you believe by 2027 all of this is going to be fixed? And do you think, like I don't think a lot of us thought April 2nd would go the route it went. So the level of uncertainty in this administration obviously is pretty aggressive. And we've got 3 more years of how it plays out. Yeah, I agree. Leverage is probably just not a good idea because this could last a while. Now, granted, Berkshire has a lot of money, so I'm very curious what Mr. Buffett is planning to do. I think there's plenty of opportunities that he would be excited about. But if Buffett doesn't buy this dip, then I think we also have some bigger issues, dude. If you can't get Buffett to leave some of his $300 billion in cash to take a risk on some of these stocks at these prices, I mean, I don't know. He must be waiting for something much worse, or he really just doesn't see any good deals. But I think there's some deals, even in the Buffett camp, that would be exciting for him. Even if he just, he probably would never do this, but even if he bought more Apple, I mean, I don't think he would hate it. He's probably not going to ever do that, but like, I don't know. I've never been a fan of Apple, but I could see him nibbling on some of his favorite stocks again. It's just, they might have to be discounted even further from here. Berkshire Hathaway right here down 3.3%. I've been of the opinion he should be buying PayPal. The buybacks alone are easy enough to justify it. It's not a dead company. It's enough of a thesis to hold it up. I think he could buy 10% of PayPal easily and make good money on it. But we'll see if Berkshire deploys at any angle. S&P 500 right there, 3.3%. So a little bit of recovery from down 4.5. We'll see if that continues, but that one is still down. Yeah, he might just buy Oxy. He might just officially buy them out at this point. Okay, so here's the question for everybody right here. I'll make a poll in the chat. Do you think that Trump is going to reverse before April 9th? That is my question. Do you think before April 9th, Trump reverses before April 9th? Dan Ives has been talking about April 9th over the past couple of days. He's been pretty upset over the weekend as well. Put out a new note on Saturday about how ugly this economic impact can be if there is not a reversal by April 9th. Tom Lee's also waiting on April 9th. Dan Ives also lowered his Tesla price target from 515 to 315. And the reason for that is because they are obviously assuming that this is going to be bad for Tesla and bad for global supply chains across the board. Here's what he said this morning. We have to assume tariffs negotiations take place. That said, the street out of the gates is pricing in top line numbers across the tech industry come down at least 5 to 10% for 2025. And the longer the policy stays in place, the numbers go down from there. Well-positioned software names like IBM, Microsoft, Oracle, ServiceNow, Salesforce will be more insulated to some of the cost inputs. But the worry is around growth, destruction, and enterprise uncertainty causing massive deal slippage. Cybersecurity names such as Palo Alto, Zscaler, CrowdStrike, Checkpoint, CyberArk will be defensive names where investors could rotate from semis to software to hunker down during this Category 5 storm and likely outperform other subsets of tech. So Dan Ives in the tech space is now thinking, hey, how do you get defensive? And cybersecurity might be a defensive thesis right here. But nonetheless, semis don't look like the best place to be in a recession if that happens. And enterprise software, maybe there's more demand, maybe there's not. But it could obviously be very, very aggressive if that plays out. Now, here's what Goldman Sachs said last night. The title of their report is Countdown to Recession. They write, we are lowering our 2025 Q4 GDP growth forecast to 0.5% and raising our 12-month recession probability from 35% to 45% following a sharp tightening in financial conditions, foreign consumer boycotts, and a continued spike in policy uncertainty that is likely to depress capital spending by more than we had previously assumed. The baseline forecast still rests on our standing assumption that the effective U.S. tariff rate will rise by 15 points in total, which would now require a large reduction in the tariff scheduled to take effect on April 9th. If most of the April 9th tariffs do take effect, then the effective tariff rate will rise by an estimated 20% once those increases in likely sectoral tariffs take effect, even allowing for some country-specific agreements at a later date. If so, we expect to change our forecast to a recession. Again, April 9th being the kind of core day that everyone is looking forward towards. And if the market, or if Trump continues to implement the tariffs on April 9th, then the market's going to have to react. Okay, getting a little bit of a bounce here. Now, this is the scary part, right? Like, I mean, how many people realistically trust any level of a bounce that we're getting right here? How many people think we've bottomed? How many people think we should sell the news into this bounce? I mean, there's going to be a big game being played between bulls and bears around, is this a dead cat bounce? Is this not a dead cat bounce? Is this going to continue to create pain? Is this going to continue to just be a retreat back to the mean, but then it's ultimately going back down on April 9th? Are these algos pumping it back up to try to get retail to buy in? Retail did buy about $5 billion worth of stocks on Thursday, one of the largest retail buying days in the past couple of years. I mean, I think there's going to be a lot of wonky games played back and forth right now. If we go green, it would not surprise me because obviously we are oversold aggressively. But if we go further red, that doesn't surprise me either because of the pain of the feeling on how bad tariffs can be. So I don't think anyone knows. And I don't know if anyone can say this is the final dip. Like, I just like, it's easy to say that when you have certainty. The difference here is that there still is a good chunk of uncertainty. Again, I don't blame anyone buying this dip at all because these prices, I think 5 years from now, will be laughable. So whether you buy today or Friday, I really don't think it matters. What matters is, are we kind of realistically forming a bottom? And I think you need some level of certainty to be able to say a bottom is formed because the market has a baseline assumption of what will happen next. I don't know if the market has a baseline assumption of what's going to happen next. Amazon's almost green. Yeah, Amazon flipping a little bit closer to green. It was down 3%. Yeah, look at that. Amazon about 10 cents away from going green, which is nice to see. It's nice to see the pain stop. I mean, a recovery back to 500 on the S&P wouldn't be horrible. It's just obviously things are still pretty ugly right here. Tesla 226, that's up from 214. Bitcoin up from 76 to 77.7. Now, in fairness to the administration, what good stuff has happened over the weekend? India, Israel, Vietnam, Thailand, Cambodia, and a couple other countries. One of the White House economic advisors said 50 countries. We'll see if it's actually 50 countries, but they said 50 countries have come to the table. They've called up the president and they said, hey, we want to get a deal done. So realistically, we have 2 days left until April 9th. Does Trump come out tomorrow and unleash a massive level of deals that have officially been announced? Maybe. And maybe, that's his MO right here, is just say, hey, we have tons of deals. And the tariffs created the negotiation bargaining power that we needed to get this done. I can see that happening. And could that be bullish? Sure. But to be honest, if the EU and China don't officially make deals with the United States, that's where I think the markets will still be upset. And maybe, dude, maybe in the next couple of days, Trump announces some really amazing stuff with the EU and China. But I think that's what we're looking for right now. We do have this headline from the EU. So European Commission just offered some 0-for-0 tariffs on the United States. We did have Elon talk about this last night. Elon has been pretty quiet about everything going on with tariffs. Obviously, you can tell he might not be the biggest fan of these tariffs, but he did do an interview over the weekend and he did say some 0% tariffs would be better than the current situation that we have right now. Maybe that is the route the administration goes, but as of now, we don't have full certainty on this. Here's what Elon said over the weekend.
I hope that the United States and Europe can establish a very close partnership. We obviously are, there's an alliance already, but I'm hopeful that there can be a very close relationship with America and Europe. And I'm hopeful, for example, with the tariffs, that at the end of the day, I hope it is agreed that both Europe and the United States should move, ideally, in my view, to a zero tariff situation, effectively creating a free trade zone between Europe and North America.
Look, maybe that happens, maybe that doesn't. But the fact that Elon is literally saying, hey, maybe we need to get a free trade zone just shows how bad these tariffs are and how much he's not willing to critique them, because that would be going against Trump. But he's trying to introduce some new ideas here. NVIDIA right here, 92.95, bouncing from 88. Meta, 487 to 497. You're seeing bounces across the board where Bitcoin just went green. You're definitely seeing some bounces, which is nice. Robinhood from 29 to 32. Palantir as well, 67 to 71. The question is, can we hold? But we are getting some bounces. Rocket Lab almost green. HIMS 1.9%. Is HIMS green yet, or is HIMS still red? No, HIMS is green, 1.8%. There you go. So HIMS going green is one of the first growth stocks I'm seeing that's now green. GameStop just went green. SMCI just went green. Where's the 10-year? The 10-year. See, the 10 years going up as well, dude. I mean, like, I feel like the White House has the stock market and the 10-year posted up in the Oval Office. And every time you see that both of them go up, you need to tank one of them to get the other one to go down. And I wouldn't be surprised if a Trump tweet comes out anytime soon. But yeah, it's nice to see a little bit of bounce. But if that 10-year bounces with it, I can only brace for impact if Trump tries to get rates to continue to come down. Again, the Fed's not cutting rates with these tariffs. They're not doing it. They're not going to risk stagflation. They're just not doing it. So it is up to Trump and Trump alone to get these rates to come down, which, again, I cannot stress this enough. Every single interview this administration has given to the media is about rates, interest rates, mortgage rates, auto rates, credit card rates, bond yields. It is not about the stock market. So any hope of a bounce, if that resolves, or if that leads to rates not being down as much as the administration wants them to come down, my only assumption can be that they're going to do something to keep rates coming down. But then again, when you see fear and greed at 3, it's like, well, wait a second. They can try to do whatever they want, but will that $7 trillion on the sidelines officially come out and start playing? Because, I mean, if you were waiting for an opportunity, I would imagine this is like at least the beginning of an opportunity, to say the least, even if it's not literally the bottom. So it is going to be very interesting to see where the administration goes from this and how capital starts to get deployed, if it does get deployed. NVIDIA 94, hoodie 33. We are seeing that reversal. We are seeing it to an extent. We are definitely getting it. S&P 500 right there, 494. I mean, it's down 1.8%. Again, I don't think it would surprise anyone if we recover. NVIDIA is almost green for the day. China, a little recovery, nothing crazy. They're still down 5%. SoFi is down 1%. Tesla down 4%. Tesla 230. That was at 215 like 10 minutes ago. So that's starting to recover. Robin again, 29 to 33. Same thing with Palantir, Berkshire. Nike is still getting hit, though. Nike down 5% right here. Amazon just went green. There you go. Amazon going green right now as well. 70% of you say that Trump will not switch course before April 9th, which is fair. Someone says, Amit, is not cutting rates bullish for banks? So yeah, not cutting rates is bullish for net interest revenues that banks and a HUD, for example, because if the Fed cuts rates, HUD can't give you a 4% APY, right? They're going to have to lower that to 3.75 or whatever. So yes, theoretically, higher rates are actually not the worst thing for financial institutions. The problem is capital spending, market dynamics, M&As, IPOs, the cost of capital, the amount of people ready to borrow, right? Like even if you have lower rates, you can make up for it in volumes. All of that goes away when rates stay higher for longer. So yes, there are benefits to rates being high for banks and financial institutions, but the market was pricing in some pretty heavy reduction of rates this year, which would be a massive tailwind just in terms of capital spending for banks, for refinancing mortgages like a SoFi, right? They would get a massive boom from that. If you don't get rates down, then that might not necessarily happen. NVIDIA right here just went green, 94.65. NVIDIA goes green, HIMS is green, Amazon slightly green, and then Apple still down 4.6% on the day. Apple trying to go green. Amit, what do you think about rotating right now? I have a small cap ETF that I'm on, less than HUD, for example. Well, look, small caps, if we get into a recession, I don't think are the best strategy. Obviously, small caps have been decimated given the volatility we've seen right now. The thing about rotating out of any position is just like, if we're at a market bottom, anything you buy theoretically is not going to be at the same prices once we reverse from the bottom, right? So reversing from whatever you're in right now, the only way that makes sense is if you think NVIDIA is so cheap or SoFi is so cheap or yada yada is so cheap that you'd rather just get out of whatever loser you're in and try to get into something you're more confident in, you have a better thesis on, and you think it's undervalued, which I don't hate. But the odds are, if we're bottoming, like, you should be able to recover some of the initial losses in whatever you're bag holding. And I mean, if you want to switch stocks, then you can switch stocks, but that's more of a question of just personal conviction on the names you're holding versus the names that you think are pretty cheap right now. Okay, Alibaba still down 5%. Nvidia, okay, so wow, Nvidia just went green to down 1%. Wow. Same thing with the S&P. It was down 1.4, now it's back down 2%. Did you guys just see that? This is why it's hard to say that any of these bounces are indicative of a bottom. Nvidia went from green to getting smacked down 1% in what feels like 30 seconds. And this is the thing, right? So for the person saying, should I rotate out of whatever I'm in to get into something else? I mean, like, yeah, you could, but it's also like those names that you want to get into could also continue to go down and might not be as good of a deal as you think they are. So it's like, it's what I'm doing is nothing. Like that's my strategy right here. And I'm just hoping we eventually bottom and we get a reversal, but whatever you rotate into or take a loss on to transition into, you got to just be confident that that's the right place to be in versus what you were in. Palantir now going red again. I mean, it was already red, but you're seeing a little bit more. Robinhood reversing from 33 back down to 32. And Amazon goes down 0.5%. Amazon was just green. Now it's down 0.5%. VIX is above 50. Yes, VIX is above 50. Yes, I still hold my call debit spreads on Hood. I have some expiring in 2026. Those have a strike of 20 that I think hopefully will be okay, given I don't know if Hood goes all the way back to 20, but who knows? And then my 2027 ones, I have a lot of time on those. So hopefully we rebound by then. But yes, I have not sold any. I've not sold anything, dude. Over the past couple, I've not sold anything. I've just held on for the ride. VIX right here is up 13%. That is down a little bit from where it was earlier in the day, but we are still green aggressively on VIX. Gio says, amid thinking about it this way, for manufacturing jobs to come back to America, the tariffs have to be permanent or seem like it, meaning they'll still have to be on after midterms. That's another thing I've been thinking about. I think that the tariffs for them to come back to the United States, or sorry, for jobs to come back to the United States, the administration actually has to go through with this plan, like legit go through with it. And that means everyone who's thinking, well, there's a reversal, well, they'll capitulate, yada, or they'll get some quote unquote negotiations. First of all, it's so confusing because half the officials are telling us there's no negotiations. Then Trump says, no, I'm open to negotiations. Then Lutnick says they're not open to negotiations. It's all confusing. But for us to get that many factories coming to the United States and creating that many jobs, yeah, you need to tell people that. You need to make people feel the tariffs are so real that they'd rather manufacture their stuff in America versus Vietnam, which in the eyes of Howard Lutnick, that might be a good thing based on what he said over the weekend.
Great American workers. We are going to replace on other networks. Armies of millions of people. Well, remember, the army of millions and millions of human beings screwing in little screws to make iPhones. That kind of thing is going to come to America. It's going to be automated, and great Americans, the trade craft of America, is going to fix them, is going to work on them. They're going to be mechanics. There's going to be HVAC specialists. There's going to be electricians. The trade craft of America, our high school educated Americans, the core to our workforce is going to have the greatest resurgence of jobs in the history of America to work on these high-tech factories.
The people screwing in the little parts on the iPhone, those millions of human beings, that kind of thing is going to come to America. Come on, bro. Who's defending this? Who's defending those jobs being in the United States of America? The dirty truth about our global economy is that there are some jobs that people do that none of us would want to do. But because of those jobs being outsourced in different parts of the world, it subsidizes the lifestyle that we have in the United States. It's just that simple. No one wants to say it, but it's the truth. And the idea that Howard Lutnick would want his daughter to be working in that type of a factory is asinine. He wouldn't. Of course not. He said automated. Okay, if it's automated, where are the jobs? Where are the jobs, right? Like, this is the double bind that he was stuck in a couple weeks ago when he was being interviewed on CNBC. It's like, if the robots are taking over, where are the jobs? You can tell me, okay, we're going to need more ways to keep up the factories and the electricians and stuff, yada, yada. But those are not millions and millions of people that Apple employs in China right now, screwing in the nuts to make a phone. If you justify it by saying, okay, well, Optimus is going to do everything, well, then buy Tesla. But don't tell me that there's going to be a ton of jobs coming to the United States. And don't tell me that, well, you need people to maintain the robots, because Elon has made it very clear that the robots eventually will be making the robots. I mean, like this entire thought train that he's gone down to me is ridiculous. It doesn't make sense. It logically compounds on itself and deflates the argument, because if we're getting more robots, then we're not getting more human jobs. Even if robots create some ancillary jobs, they're going to be created as a byproduct of having all those robots. And then B, if you actually do have those many jobs, yeah, no one's going to pay you 50 cents to put a screw in an iPhone. Like that happens in China. In America, it's going to be minimum of 15, 20 bucks an hour. And that's just not sustainable for Apple to have those types of costs. So I don't see it, dude. I really don't see it. Or at least if that's the way they're communicating it, I don't think that's the best way to communicate. By the way, I mean, for those that didn't see the Trump quote, I'm putting it back on the screen right here. Kris just made a good point on Twitter. When someone tells you not to panic, that tends to be the time when people are panicking. And yeah, I just realized that's what Trump said. Don't panic. Kris says right here, only people who say don't panic are truly panicking. I mean, like you don't need to publicly tell people not to panic if people are panicking. Maybe people are panicking for the wrong reasons, but obviously people that have seen their retirement accounts get wiped out, yeah, they are. I think they are right to be panicking right now. It's ugly, dude. It's very, very, very ugly. Ahmed, are you pissed right now? I'm not pissed, dude. It's like, look, I've not done anything in my portfolio. I don't need the money in my portfolio. I'm in enough of a good situation in life where I'm not literally taking money out of my portfolio every day or every week. Obviously, does this affect me? Yes. I'm not going to get my $30 manicure pedicures anymore. That's not happening. So I think that's honestly the biggest casualty of all of this, because I really enjoyed those mani pedis. But it's not about being pissed because I'm down money. Like, a lot of people are down money. It is the way this has been played out, and the fact that the administration is talking to us like we're idiots, in my opinion, is what more people are pissed off about. That's the issue. It's not that, of course, stocks are going to recover, dude. Like, of course, like we will be back to all-time highs eventually. This is not going to be some decade-long recession, right? Like anyone saying that is just fear-mongering. And that's not my goal here. My goal is not to fear-monger. Things will be back to normal eventually. It is just the type of destruction and the way in which he's gone about this is, I think, what's pissing everyone off. And unless you get some deals, like some meaningful deals that change the global world order around free trade, or bring back all those beautiful jobs that Lutnick is talking about to the United States, I think all of this was for nothing. And it was just like a little bit of a game. Now, we'll get back to all-time highs, but we'll get back to all-time highs having dealt with something that was just stupid. S&P 500 right here recovering a bit. That's above 500. So that's a nice level, only down 0.5% from 481. 481 to 500. That's a nice recovery. Hopefully that sustains itself. The Qs just went green. Amazon just went green. HIMS went green. Pretty much everything going green. NVIDIA 97. That's up 3%. S&P 500, there you go. Just turned green on the day. And hopefully we can now sustain some of that green. But anyway, yeah, my point is, like, I'm not pissed off about the market being down. I'm just pissed off about how this has played out. And I think everyone is. And I think it's okay to be pissed off about that. I don't think that's being overly emotional. Now, selling, in my opinion, can be overly emotional, right? Like if you just sold the S&P at 480, yeah, that's a bit overly emotional. But then again, I wasn't selling the whole way down, so I'm not going to sell down here because you can just never time a bottom. That's what I think is more emblematic of like really being emotional about this. But like voicing your concern for the fact that this is, you just ruined a couple years worth of gains in 3 days. I think that's fair for people to be saying that. All right, Trump just tweeted again. Let me pull this up. He just tweeted right now. And he's talking about the Japanese. He just said, by the way, Palantir, S&P at 506, Palantir is at 75. Palantir is up 2%. Trump said countries from all over the world are talking to us. Tough but fair parameters are being set. Spoke to the Japanese prime minister this morning. He is sending a top team to negotiate. They have treated the U.S. very poorly on trade. They don't take our cars, but we take millions of theirs. Likewise, agriculture and many other things. It all has to change, but especially with China. Maybe that's also why the market's reversing a little bit, because Trump's saying that, hey, we're getting some real negotiation coming through, which again, before April 9th, if he announces like a lot of deals, which he has 2 days, 48 hours to do, then yeah, I can see the markets reversing on that, because the markets would be happy that we got some deals done. But obviously we would have to see some pretty aggressive deals getting in place pretty soon. Okay, so here's the question right now to everybody. It's a question we got to ask based on what we're seeing right now. Is this a dead cat bounce? Or rather, is this a bull trap? That's a better question. S&P green right here. Is this a bull trap right now? We got Jeremy C on CNBC. Let's go to him, see what he has to say about what we're seeing right now.
Later, if we're talking about now, big nose.
Indeed.
This policy could be undone in minutes.
Well, you know, the Fed can be much faster moving, and I've often advocated them to be much faster moving than they did. They can make changes intermeeting. There's nothing that restricts them from doing that. And, you know, so, you know, if Trump, in fact, does reverse himself, they can reverse themselves also.
Okay, hold on. I'll go back to that in a second. Yeah, market's definitely reversing pretty aggressively right here. S&P 500 up 2%. Okay, everything's green. Tesla 246, SoFi $10.19, HIMS 30, Amazon 180, PayPal 60, TQQQ 44, the Qs 434, S&P 512. Look, I like this. I am not surprised, because as of last night, it was we were below 5,000. Like at some level, you would think we would get a reversal, but I'm also not sure if this is, or if that was the final dip. But that's why, you know, I think if you didn't sell anything, it was for this reason, because you just can't time when we officially bought them. Like, this is encouraging. This is nice to see. And it's also predictable based on how ugly futures were last night. But is this actually a trap? Is this real? Like, you know, how do we play that? Trump is considering a 90-day pause in tariffs for all countries except China. Hold on. If that's the headline, that's why we're going green. That's, I mean, there's your headline right there. Let me confirm. If that's the headline. Yeah, there you go. There you go. There you go. That's it, folks. Trump is considering a 90. Oh my gosh. There you go. We got the delay, folks. There it is. It's done. We got the delay. We got the delay. Markets are green. Everyone was talking about countries capitulating. Trump just capitulated. Trump just capitulated. There you go. President Trump is now considering a 90-day pause in tariffs for all countries except China. Where's the S&P? S&P is up 2.2%. Everything. NVIDIA 100, Meta 530 from 487, Tesla 215 to 245, SoFi 1040. Stocks go up, stocks go down. Robinhood trying to make its way back to $40, up 6% right now. Verizon's green, IWM is green, HIMS is green, Amazon's green. Everything going green as a result. This is insanity. Has to be insanity, right? This is actually insanity. Like, he capitulated. There it is. Amazon's up 6%. Now, look, the actual percentage moves look aggressive, but they're not that aggressive because we were down so much that, like, the reversal obviously will seem aggressive, but in reality, Palantir is just getting back to the price that it was always at. It just got hit so badly yesterday. That's why it looks like a big reversal, up 9%. But then again, last night on the futures, it also, you know, it also showed how bad it got, and that if there was any reversal, it would be a violent reversal to the upside. S&P 500, that's up 3.5% right there, 521 from 487 to 521 within what, 15 minutes? Based off a delay of tariffs. Now, okay, here's the question. Do we go through this again in 90 days? I think the answer is no. The answer is no. I don't think in 90 days this is going to happen again based on what we just saw. Now, the 10-year, see, but like this doesn't make sense. The 10-year is spiking. This is not what the administration wants. And so I don't know how they deal with this, dude. I mean, saying that it's going to be delayed by 90 days is a death blow to this 10-year coming down anytime soon. It's great for stocks. Maybe Trump does care about stocks more than he says he does. But this game will, I guess, have to be played in 3 months, but maybe the game doesn't get played at all because they don't even consider doing this again. They just capitulated. They completely capitulated, completely backtracked off everything they did. Let me see if we can get some coverage on this real quick. This is a complete reversal. Now, what did that reversal get us exactly? Like, what exactly did we go through all that for? Because we didn't strike any amazing deals. I don't see any crazy deals. So what did we go through all that pain for? I don't know. Let me, here's the coverage right now on this. Trump is delaying all deals except on China for tariffs by about 90 days. That's what we got right now.
This is not a negotiation. And then again, Howard Lutnick, the Commerce Secretary, yesterday was asked point blank whether there would be any postponing because there was some talk of that over the weekend. And he said, absolutely not. It's sort of obvious these have to go into effect while the president resets global trade. The president himself has been saying he won't strike any deals with China and the EU, were the two countries he's been most focused on, or the two trading partners, and saying that there was nothing that they could offer because he wanted to see the trade deficits reduced. So a big shift here. We will have to see if this is confirmed. I will say, obviously, a huge jump in the markets. This is what they've been hoping to see. But there is still the question of what happens 90 days from now. You can't erase trade deficits in 90 days. There's still a lot of uncertainty that will be left out there as we wait for what gets settled there, and the sectoral tariffs still to come. So good news for now, still a lot more to come, guys. Maybe.
Yeah, Megan, again, so I just want to, like, we're trying to find out where this was said, whether it was on another network. It may have been a while ago, though, this morning. I don't know what you know. I'm just trying to understand why the S&P turned the way it did, at least based on the timing of the interview that I think Hassett had with Fox, I think it was.
Absolutely. We're doing the same thing. And the White House, the White House so far not confirming this. So we have to wait and see where this came from and whether.
Oh, wow. The White House hasn't confirmed this yet. Okay. So markets have reacted on this headline. There's no official confirmation. I guess we'll see if the White House confirms it pretty soon. I mean, they're going to have to confirm this or deny this, I would say, within the next hour. But I guess we'll find out pretty soon, because this doesn't seem like Trump would do this just based on the fact that it's moving this 10-year up as aggressively. But if he did, then he capitulated. And I guess we'll get confirmation on that soon.
He said it directly to a network, and our Eamon Javers is at the White House right now trying to track all of that down. So we will have to see. Maybe it went directly to the wire services, for example. If this was simply a continuation of the discussion we heard over the weekend, then it certainly doesn't mean any decisions have been made. I'll also flag, guys, we're going to hear from the White House just around 11 a.m. and then again 2:30 p.m. today. So more chances for the president himself to try to clarify whether he is in fact thinking about a delay or whether he's exactly where he was on Truth Social this morning and saying that he's in this for the long haul and urging people to just be patient.
It also gets into the question, and there was a lot of discussion about this weekend, which is who's calling the shots, who has the president's ear, who's making decisions, who's in the room, who's outside of the room. Like, clearly, Peter Navarro is a big influence right now, and maybe it's just President Trump himself. But where's Scott Bessent, the Treasury Secretary, who there's no, I mean, everyone I spoke, there's no way he can be, you know, he can be on board fully with this policy that is clearly going to take us into recession and question the credibility of our assets. So where is he, and where's Kevin Hassett, for that matter, who's also a well-respected economist?
Right. I was going to say the same too. Scott Bessent and Kevin Hassett both have a long history of public comments not being fully supportive of tariffs. So I would say the more discussion we hear about some sort of a pause, the more discussion about negotiations and striking deals, to me, that would signal that the two of them are starting to have some influence. But think about Peter Navarro's career. He wrote the book called Death by China and has been updating it for years since. President Trump himself has spent decades focused specifically on China, but also on trade deficits writ large, which he sees as a negative on GDP and a negative for the U.S. economy, even though most economists don't agree. So I would say, regardless of...
Wait, are we reversing or no? What are we doing? Are we reversing? Oh, shit. Wait, Pouncer just got halted? Holy crap. Yeah, guys, we're reverse. Oh, S&P just went red. Oh my God. Oh my goodness, dude. This is... Well, if you wanted to get out, I mean, I guess you had a shot for 5 minutes to sell. Okay, so I don't know why it's going red outside of the fact that the White House may be denying those reports. I don't see any headlines on the White House has denied reports yet. But yeah, we are going red. Let me see if I can find some more coverage on that. Give me a sec. Let's see.
Of what happens with this specific headline, this is a cornerstone of this administration's economic policy. And I wouldn't expect, even if we get some soft...
Okay, I think we have some coverage here. Hold on.
We've ever seen from Trump, we don't know that that's going to be the end of it.
Yeah, and a 7%
pause, at least right now. Officials in the West Wing are checking to find out if this is an accurate report, but no information and no confirmation, importantly, Carl, on any idea of a 90-day pause or consideration thereof by President Trump as of right now. I just talked to a couple of folks, as I say, in the West Wing. There's real confusion, I would say, on this point in terms of whether or not Hassett is talking about something that's about to be announced, is being contemplated, et cetera. So for right now...
Bro, Hassett's getting fired if this isn't true. I mean, if this is not true and he just said this, like, Trump's not going to be a fan of him putting this out there right now because it makes Trump look like he's weak, like he's capitulating. But maybe it is true. We just don't have the headline yet.
And things can change. But for right now, no confirmation of this idea of a pause on tariffs, guys.
And now we go back to negative.
Yeah, Eamon, it's not often you see a move like the one that we did, not associated with news, but I'm really trying to understand where...
I don't know why Palantir is halted. Maybe because it went up so quick and went down just as quick. Palantir right here at 74.94 went from 67 to 82, now back to 74. But I don't have a good reason for why it's halted other than maybe there was just way too much volume coming in.
It came from, when it was said, if it was said, how it was said. Hassett was on, but he was on earlier this morning, I think, in the 8 o'clock hour on Fox, and we had the move happen at around 10.
Yeah.
Do we know if there was something else said somewhere else, or I don't know. I mean, I guess I'm just trying to understand this because this was a dramatic move. Obviously, we're giving a tiny bit back of it now. Well, actually, a lot. We're up. We soared on the S&P briefly.
Yeah. David, that's a good question. I don't know where this came from. I'm seeing here a quote from Hassett on Fox saying, I think the president is going to decide what the president is going to decide. That's not a definitive statement.
No, that was the same thing he said yesterday.
Right?
Yeah.
So
it also doesn't jive at all with
of
what the president has been saying this morning on Truth Social or last night on the plane.
Or what Peter Navarro said, for 15 minutes on our air this morning, right?
Yeah.
I mean, all the indications have been from all of the administration officials that they're willing to hang tight here. They're not blinking. They're not backing off. And like I said,
that's exactly what I thought based on the first hour of the show where we looked at every single thing Trump said last night and this morning. The idea that there would be some 90-day relief to everyone except China seemed insane because it just seemed like that was not the vibe that Trump was giving off. So I wouldn't be shocked if this headline is fake, but it got the market moving. That's how desperate the market is for any sign of capitulation here.
When I asked officials here in the West Wing just a minute ago whether or not there was any consideration of a 90-day pause, they said they hadn't heard that. They don't know what that is, and they'll get back to me, basically.
All right. Well,
I think it also
has been
makes
an extraordinary 10 minutes in the market. Well, let's call it about 20 minutes in the market on what may not be actual news, guys.
Dude, what a day. What a day. Some of you guys are saying Fidelity is down. Palantir got halted. I mean, what is going on, bro? Robinhood is working well for me. I don't see anything crazy on Hood. I know some of the brokerages are being a little weird right now, but we just went from 480 to 520 back down to 503 on the S&P 500, literally within minutes. And a lot of money could have been made in those minutes if people got out some positions or sold on some big dips they bought. But oh my, this is crazy. Palantir right here, unhalted now. There you go, 74.55 on Palantir. That's up about 1%. It probably got close to circuit breaker territory because there was just so much volume coming in. 59 million shares have been traded already for Palantir. And that's why we're seeing this right now. Dude, I feel like everyone cannot be arrogant here and be like, yep, this is the dip or this is the rip. Because, yeah, as soon as the markets went up, it was like, all right, yeah, buying the dip was the best thing ever. But, like, now the markets are right back down. So was buying, there you go, back below 500. Now is buying the dip the dumbest thing ever? You know what I'm saying? So it's like, I just think these short-term moves, we're not going to be able to claim victory for the bulls or the bears until we have weeks and months of data. Unless we have, like, some real definitive headlines of capitulation by Trump. But this 90-day headline thing, I'm calling BS on it because it doesn't feel real. Unless Trump actually cares about the stock market. But everything he said, even last night, did you guys hear the quote from last night? Last night, the quote was, some people have to take their medicine when it comes to the stock market. And so how do you go from saying that to then saying, oh, yeah, we'll have a 90-day delay because I'm afraid about the fact that NVIDIA is down 40%. Like, it just doesn't make any sense. Here's what Trump said right now. We'll get to Dan Ives in a second. Here's what Trump said last night about the stock market.
Pain in the market. At some point, you're unwilling to tolerate this idea of a Trump put. Is there a threshold?
I think your question is so stupid. I mean, I think it's I don't want anything to go down, but sometimes you have to take medicine to fix something. And we have such a horrible, we have been treated so bad.
I mean, are you going to go from medicine to 90-day delay? That just doesn't make sense to me. It doesn't make sense.
Huh? I don't know if someone was long and said, hey, I'm going to send a rumor out and get out of this market. It also shows you, there are a lot of short sellers, and boy, a rumor like this, they got to cover. Also, we don't know, was that just reciprocal? If it's going to happen, which we don't know, is that include that 10% base, or is it just the so-called reciprocal tariffs? That's certainly also on news. I mean, obviously, the market wants that sort of relief. I certainly most hope that Trump takes it. But again, I'm very confident in the long-term growth of the U.S. because this is a huge.
As for technology, it's the worst performing sector year to date. It is down over 20%. All the Mag 7 names are trading in bear market territory. That would mean more than 20% off recent highs. Our next guest is warning this tariff policy would set the U.S. tech sector back a decade if it stays in place. He's also slashing his price targets on Apple and Tesla due to, of course, those concerns around tariffs. Maintains his outperform rating. You know him. He's Wedbush's Dan Ives right here at Post 9. Dan, man, you had a busy weekend. Was looking at some of your stuff over the weekend because we were all kind of working. Musk created a brand crisis, and Trump tariffs equals a perfect storm for Tesla. Apple tariff uncertainty turns the supply chain upside down. And really the one I think that got perhaps the most attention, economic Armageddon. You're not feeling too good about anything, are you?
Yeah, look, I mean, and we've talked for decades. I mean, I'm one to always look through near-term issues, structural, dot-com bubble, financial crisis, COVID date. The difference here is that for U.S. tech, it would be the ultimate, what I view as an Armageddon relative to the supply chain, and really take the core thesis that we believe U.S. tech is ahead of China, and that would really throw that out the window. And that's why we've written about it so much, because there's someone that spends so much time in Asia, so much time in fabs, in China, seeing how these things are actually produced. The reality of bringing it to the U.S., it's just, I view it as
Explain what's behind your belief, though, in terms of where is the cost then? I mean, we've been talking about a potential slowdown given CapEx numbers, which are already incredible, would have to go even higher. But explain to me what is the Armageddon based on?
Yeah, a lot of it is based on the supply chain is cemented in Asia. For example, if Apple brought it to the U.S., it would take $30 billion just to take 10% of that supply chain. And I believe iPhones, if they were built in the U.S., would be $3,000. If you look at the way the structure...
I think we got some report from the White House. Hold on, guys. I think they have officially commented on the 90-day thing. Okay, I'm looking for the exact quote, but it looks like the White House just said, we are not aware of any 90-day rumor. I'll get the exact quote for you guys in a second, but it looks like the White House is denying this 90-day. It looks like that's what they're saying.
Of the supply chain between Taiwan and China, the concept that you can actually make fabs, we have the labor force, the manufacturing takes 4 to 5 years to build a plant. That's why it's Armageddon. And the reality is that once this snowball starts going downhill, data center demand, uncertainty, you've already created not just a recession, but it goes back to my whole career. For the first time, U.S. is ahead of China in tech. This would wipe that out, and China ultimately would zoom ahead. And that.
Yeah, the headline is White House says unaware of a 90-day pause rumor attributed to advisor Hassett. Markets are not literally going back to where they were in the morning, but we are slightly green right here. But the White House basically denying this 90-day thing right now.
That's why we've talked about it so dramatically.
Did you see the Dave Chappelle clip that was going around over the weekend? I mean, I feel like that actually really nailed it. It's like, we want to buy iPhones. We don't want to make iPhones in this country. And I do feel that there's a lot of folks around who are looking at the U.S. model. We're the envy of the world, right? Why do we want to become more like them?
And my thing is, it's a sad day for U.S. tech. And, talking to so many within the supply chain, whether it's Asian, U.S. tech companies, what they could say publicly or not, private companies. The reality is that the reason it's an Armageddon is that this would really wipe out, in my opinion, the modern U.S. tech world relative to the way that we produce chips, the way that we produce hardware, how data centers are built, and the concept that we're actually going to build this in New Jersey, in West Virginia. It could sound in front of a microphone. It's just not reality, and that's why I felt very compelled to speak out. And is it from a stock perspective, it's trying to figure out what the worst case, what could this mean for Apple? We didn't downgrade any of our stocks.
Why not? Why didn't you downgrade
because,
it?
It's a great question. The reason is because if I believe this is permanent, then it's game, set, match. But if I believe that this is in some way temporary for a few months, or some negotiated, we got to be able to look on the other side.
Coming back to the big question that everybody has, and that we were having conversations with all the decision makers, or many, about this weekend. I'm sure you were having some of the same. Is it a negotiation, or is it permanent? Well, is it designed to raise revenue simply, and that's really what it's about, or is it really designed to lower barriers? I don't know.
And for right away, just for this street already, 5 to 7% cut to numbers. If right now they announced the deal, you'd already cut numbers just based on the uncertainty.
What if they don't announce a deal? What happens to the earnings of Apple?
Well, first,
the White House says the 90-day tariff pause headlines are fake news. Where is the market? We got a quote, fake news. There she goes. S&P down 1.6%. Well, what's today's date? April 7th. We're not going to forget this one. April 7th, the White House officially confirming this is fake news. I'm going to see if the press secretary said anything in particular. But that is the official word of the White House. Yep, fake news. Yep, 90 day. We are not aware of any 90-day pause. There you go. There you go. And now we can get back to going red. I mean, Newsmax is up 12%, though. That's nice. But SPY's red, Q's red, Apple's red, Nvidia's red. Where's Palantir? Palantir right back to 73. It was at 82 at one point. JP Morgan just went red. Bank of America's about to go red. Broadcom's about to go red. Micron's going red. Shopify's red. We're back to red. April 7th is more like April 1st, bro. Dude, holy, that just shows you how unbelievably desperate this market is for any sense of these tariffs not going into effect. And I think everyone has to step back and realize the market has made up its mind. The market, with all of its complicated algorithms and trillions of dollars of wealth, has clearly told everybody, if you get rid of the tariffs, we are ready to go back to business as usual. If you do not, we are going to keep inflicting pain. And the fact that we saw that 5-minute reversal, which was aggressive, S&P 520 from 487. I mean, that's like a lot of money you can make if you're playing that from a trading perspective. The fact that happened off the sheer unconfirmed headline that tariffs are delayed, not even that tariffs are gone, they're just delayed. Imagine what happens if we actually get some deals done and we officially stop the tariffs. But how serious is Trump on really getting deals and stopping the tariffs? I mean, in a couple of days, we'll find out. But I think that is bullish from one perspective of just like how aggressive the upside could be if we put an end to this. It's just, right now we're not immediately close to putting an end to this.
So I don't think any company gives guidance on the calls, but I think Apple, if they didn't, you could be looking at 10 to 15% cuts. If this continues for months, just given the cost structure, then you start to look for a lot of these. You could be looking at 20, 25% cuts across the board.
On earnings, on EPS.
On earnings and the EPS, just given the actual cost structure. And then it goes to, let's say, on software, where we're more bullish cybersecurity, the self-fulfilling prophecy, given uncertainty, data center, AI revolution, you could cut 15, 20% of that demand right now just based on the uncertainty. And that's why the sad thing, as someone that's such a supporter of U.S. tech for decades, is that what this has essentially done is cut U.S. tech at the knees. It would be like in a baseball game, me coming to the dugout before the game, like, okay, you're not going to have a catcher. You're not going to have a shortstop and no left fielder. Good luck. You should have a great game. But 3 years from now, I'll get you a catcher or a shortstop. That's the problem.
Right. The other thing in your note about Tesla is the political risk that Musk, you say, has introduced and is going to result in the loss of the future customer base. But that's been going on for a while. So what was it that changed your view on that front?
I think it's because our view, and we've talked about it, step back, balance it. Doge being CEO of Tesla, he continues to go forward and forward. And my view is that 20% demand destruction in Europe, 10%, I'm talking permanent destruction in the US, as one of the biggest supporters of Tesla, it's basically, you're yelling and basically telling whether it's Musk and the board, this is the time. Because if you don't do it now, then ultimately you risk permanent brand destruction that I believe changes the Tesla story.
While you're here, Dan, let me just take a quick break and get to Eamon Javers in D.C. again. Eamon?
Spoke to Caroline Leavitt, the White House press secretary, on the phone just a short time ago, and she tells me it is, quote unquote, fake news that the White House is considering a 90-day pause. So the White House pouring cold water on this idea, wherever it came from, that they're considering a 90-day pause on tariffs, saying that the president is committed to his tariff regime, and any reports that he's considering a 90-day pause are, quote, fake news. That from the White House press secretary on the record just a short time ago to me on the cell phone here as we try to sort through where this came from and why it is that the market became convinced that might be a possibility. The White House saying it is not a possibility, Carl.
So, I mean, we're at this the standoff then, it feels like, between the markets and the president. It's like this weird game of chicken, right, of who's going to blink. And clearly the White House is not blinking.
White House is not blinking. Clearly, the market wants the White House to blink. That's why you saw that jump on a kind of a speculative thing about what somebody might have said. But clearly, the White House is not blinking. All the speakers from the White House, whether it's the Commerce Secretary, Treasury Secretary, Trade Advisor, the president himself in social media posts, all indicating that the president is committed to this tariff agenda and is not backing off, despite the market clearly desperately looking for a kind of a ray of hope here that he might do exactly that. And one of the things we're going to have to figure out is sort of where this report came from on social media and how it moved the market.
It came from Hassett on a Fox News clip. I'm trying to find that clip. But how did that? But that was like a couple hours ago. So someone like made that headline viral somehow, dude. I mean, I like kind of feels a little fishy, if you know what I mean. Feels like there's a little bit of a manufactured attempt to get that headline to get that viral to the point where the market's moved $7 trillion in 5 minutes. I don't know. It feels a little weird.
To the extent that it did just over the past couple of minutes, because it's clearly not true from the White House's perspective. And if you look at the transcript of what Hassett said, it seems to indicate that he didn't say a 90-day pause was being considered. So was something lost in translation here?
This is the clip. This is the clip right here. So the question is, would Trump consider a 90-day pause in tariffs? Here's what Hassett said.
Will you do a 90-day pause, or would you consider? Will you do a 90-day pause? Would you consider that?
Or Bill, yeah, I think that the president is going to decide what the president's going to decide. There are more than 50 countries in negotiation with the president. We've got the prime minister of Israel coming today. We've had a reach out overnight from Taiwan. And but I would urge everyone, especially Bill, to ease off the rhetoric a little bit. The fact is that say 10%.
Yeah, he did not say anything close to that. He didn't say yes at all, guys. We just saw that clip. He said the president will do what the president wants to do. Who the hell manufactured that headline, and how did they get it to go this viral? That's my question. Because if you took away yes from what Hassett just said about the 90-day, there's no way. Someone had to be doing something to get CNBC and Bloomberg and all these guys to report on that headline and make everyone think it was real, because it quite literally moved the markets. And he did not say yes at all. Because the market wants it so badly. Yeah, but the market's still going to react to headlines, right? 90-day pause. Like, how did that become something that is mainstream news across the terminal, all that stuff, to get markets to react that violently? I'm just not buying that it just all of a sudden, goes viral and makes it through all the business headlines. That's weird, bro. That's weird. It's a little weird, right? It's not like it usually just doesn't happen randomly. I mean, yes, the mainstream media is not the best at always reporting the news, but a headline like that seems a lot more calculated, especially when you're literally gasping for straws, because there was absolutely nothing that Hassett said to confirm that. Tesla right there, still down 3%, went from 245 to 231. Google 146, Robinhood 36 to 34. At least it's above 29. HIMS is at 27. Pounds are still green on the day. The Q's still red. S&P is back to 500. So you're getting a little bit of green still, even though we're not as high as we were before. But obviously still feeling some pain. Let's finish up with Dan Ives, and then we'll keep going from there.
Or were some folks playing sort of deliberate games on social media to try to move the market? The market clearly moved on something, guys.
Well, this was a wire flash ad. I mean, it does look like they're going back to what he told Brian Kilmeade on Fox this morning. Eamon, Kilmeade, would Trump consider a 90-day pause in tariffs? Hassett, I think the president is going to decide what the president is going to decide. I mean,
right.
Your best guess as to whether or not the wires tried to reheat that conversation.
Yeah, I mean, you could be parsing that very sentence there, but that's Kevin Hassett saying, who knows, right? That's not the president. Kevin Hassett saying the president's going to consider this pause. That's Hassett just punting on the question, basically, and moving forward, because all the White House advisors are in a position here where they know what the president's intent is. They know that the agenda here.
Oops, sorry. Let me pull that back up again. I was switching to a different tab. But yeah, dude, like this idea that they manufactured that headline out of nowhere, very, 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 very tough to believe that that's how this played out. Feels a bit more calculated than not. All right, let's finish up with Dan Ives, and then we'll be out.
It's Armageddon, and the reality is that once this snowball starts going downhill, data center demand, uncertainty, you've already created not just a recession, but it goes back to my whole career. For the first time, U.S. is ahead of China in tech.
Eamon, thank you. Amen Jabbers. Dan, just to wrap up with you, we didn't get to Tesla, which you've also obviously are concerned about for any number of reasons. Elon Musk, perhaps more outspoken than any other CEO, although he really didn't say too much, but he did go at Peter Navarro. I got to believe he's concerned, and deeply so, about Tesla in terms of his own manufacturing, how much they have to import for parts and things of that nature. But, you know, let's move beyond the political side of the Tesla equation and just what the tariff side means for the company.
Yeah, and what the biggest worry is in China. I mean, in terms of more and more, given the retaliatory that we see, you'll see more China domestic by BYD, NIO, and others. And then you look at ultimately what this could do to their cost structure. And my whole worry with Tesla is that this now is turned into a life of its own. And the tariffs, ironically, become a bigger and bigger headwind for Tesla, especially when you start to look at the China market and you look at everything BYD is doing. And that's why, you know, this is really a perfect storm between the political brand tornado F5 that he's created, along with the political symbol, and now the tariffs. That's why it's a dark day. But the reason that we remain bullish is because autonomous and robotics and the future. If it wasn't for that, we'd have to downgrade the stock.
The future of manufacturing, autonomous and robotics. Yeah. Okay, thank you, Dan.
Thank
Dan
you.
Ives.
Oh my gosh, dude. What a freaking day. S&P still red. I mean, the one good thing about this headline is whatever market momentum it created, it got a lot of stocks to go green, even if they're eventually going to fall back down. As soon as the 90-day thing came out, it felt like BS. It really did, because if you've been listening to Trump for the past couple of days, for the past couple hours since this morning, it did not seem like he would easily just give an exception like that. Also, only excluding China makes no sense because the EU is one of the big ones he's been talking about. So he would have had to exclude China and the EU. But markets really rallied on it, like aggressively rallied on it. And now we're back to red. It's just not as red as we were before. Again, I think it highlights how much we would shift if we actually did have some type of a delay or some type of a capitulated, negotiated deal. But we're not there yet. Yeah, the 10 years climbing too, dude. What, like, this is, you know what, the saddest thing about this theory that they're tanking the markets to fix the 10-year is that we talked about it on this show, I think a month ago. And although I know a lot of you guys hated that theory, I didn't hate the theory. I thought there was some validity to it. But even I did not think they would actually tank the markets to fix the 10-year. And it feels like that is their plan. It really does. And if that's the case, it's hard to say it's a bottom right now. Because if stocks go up and then the 10-year spikes, well, that's not what they want. They don't want it. Like, you just like, I don't know how much more clear I could be about that based on how I've been listening to. They do not want the stock market up if it means that rates come up. Steve Leisman said it was the dumbest theory ever. I'm not saying it's a stupid idea or that it's not a stupid idea. I'm just saying I kind of believed that that was their angle, even though it's obviously ridiculous. But in the back of my head, if I really believed it, I would have sold everything, right? So I'd be like, oh, they're going to tank the markets to save bond yields. I should get out. In the back of my head, I didn't really believe they would do that because I'm like, what? Like, that's kind of stupid, right? but it's happening. It's really happening. Anyway, I mean, look, we're pretty fucking low in the markets. You would imagine the VIX is cooling up a little bit. S&P slightly green. Qs are green. Nvidia still holding 2% up from 88. I mean, you would imagine some money off the sidelines also comes in. Grab should not be down 5%. The tariffs don't even affect them. The fact that Grab's getting hit with all this is stupid. I will be live tomorrow at 10 p.m. on Wednesday, on Tuesday. Tomorrow, Grab's having their first ever product announcement day. So 10 p.m. Eastern. If anyone's interested, I'll be live streaming that. But like fundamentally, a lot of these companies are absolutely fine. It is just the tariff headline that's compressing them, even if they're across the world and they're not affected by it. Yeah, we all thought Thursday was like Thursday was down 5% on the S&P. We all thought Thursday was like, all right, this was the big day. Then Friday came 6%. And then today, I mean, where it looks like we're going to go green today, even if it's slightly, unless we reverse back to being red. but we were down 5% at one point today. Tourism will get hit if there's a recession, which means mobility. Yeah, that's a fair point for grab. I mean, if we're not in a recession yet. Obviously, if the tariffs create the recession, the market could price in a lack of tourism. So that's a good bear case for grab. But it is contingent on us getting a recession. Okay, here's another question. Let's ask everybody. First of all, everyone said to the previous question, 72% of you said yes, it's a bull trap. I mean, at least at 520, the majority of you were correct about that. Okay, so here's a question. What was my question? What was I just going to ask? Oh, yeah, here's the question. Do you think in 2025 we get a full recession? Not a negative GDP growth quarter, not like oh, we're losing some jobs here and there. I'm talking about it's recession. It's like you really ask yourself if you're going to buy that Starbucks coffee because you're not sure if you can legitimately afford it. Like that type of recession. Because, I mean, that's kind of how the market's being priced right now. But also that's what is being implied by some of these tariff negotiations. 60% of you say no. Crossroads says no, but maybe recession in 2026. Duff says, bro, I already live like that. Let me just say, I'm sorry for causing the stock market collapse of 2025 because the day I bought that damn Saratoga water bottle, I hope you guys use that as an indicator to sell everything. I didn't know, like me buying a $15 bottle of water would be the top. I didn't know. I thought it was just a $15. It was not $15. It was like $2.50. But I did not know that Saratoga would cause all these problems. And unfortunately, it is. Now, look, for those saying it'll take 2 to 3 years or 5 years to recover from where we were, I don't agree with that. I think the markets will rebound as violently as they went down on any piece of good news. I really do. I do not think it's going to take till 2029 for the S&P to get back to 6,200. Like, I think it could happen within a couple weeks, to be honest. But we really need to see a shift. And this administration is just not giving us that shift, which means maybe it could take a couple years until Trump gets voted out at this point, if this continues. But I think if they shift policy, we rebound easily because I think earnings growth it'll be messed up for Q2. But by Q3, Q4, if all this tariff stuff is gone, it'll be able to get back to normal. It's just right now, obviously, it's looking pretty ugly. Tanner says it won't recover as fast, but faster than ever. I agree with that. S&P 500 right here, 508 currently right now. Mid single-handedly ruined the world economy. I didn't buy the water at the top. The top would have been 6,200. I bought the water at the top of the bounce, which was 57. Basically, when we got the 200-day moving average, I got some Saratoga water. And so if we capture the 200-day moving average again, I'm getting Dasani, bro. I'm going to make sure my ass doesn't even think about getting any Saratoga. Fear and greed was 6 on COVID. Right now, we're at 3. Right now, we're at 3 on fear and greed. Why are we pumping? I don't know, quite frankly. I really don't know. The 90-day headline stuff is not happening. The one reason we're pumping probably, and this is just based off stuff we talked about last night, which is that like it is so bad that you would imagine someone steps in and takes advantage of these prices just because of how aggressive these declines have been. And so that's probably a reason why we could be going green. But I don't think there's any fundamental headline. There's no tariff headline. There's no geopolitical headline. There's nothing macro data-wise for why we're getting this bounce. Other than, look, maybe it literally was that bad that money stepped in and said, all right, we're going to take advantage of this. Otherwise, I have no idea. I don't actually know why we're green. Could just be a dead cat bounce, markets, algos, pumping shit up to get people to buy in. Just to dump as well. Sachin says, someone's really creating liquidity and pump for a massive exit. I am worried that we are going to see a massive dump. Look, I can't disagree with what Sachin's saying. I mean, like, does this look normal? Does any of today look normal? And the fact that that headline went viral off of him basically saying nothing compared to what the headline implied, it does feel like someone needs to get liquid. and whatever they need to do to get the markets to pump, to get them an exit. Yeah, I can't deny, it definitely feels like there's some level of manipulation going on there. It's just, I guess, did we already experience it when we got to 5,200 on the S&P, or are we still yet to see that that exit from somebody? Trump has not tweeted in the past hour. Again, the last thing he said was be strong. I don't see any new tweet from Trump. The last thing he said was be strong and don't panic. But outside of that, no other update from him right now. 61% of you say yes, in 2025 we get a full recession. Look, I'm still in the, or sorry, 61% of you said no, we don't get a full recession. I'm also in the camp that we don't get a recession, but it is only if these policies aren't continued to be as bad as they are, right, with tariffs. Then yeah, but if we do, like, I don't know how you take recession off the table as a possibility. I don't see a new Trump tweet. You guys are saying Trump tweet? I don't see one. It's not on Truth Social. Is it on actual Twitter? Let me check. Oh yeah. No, this is the same thing that he posted on Truth Social. It's the same thing. It's just reposted. It's the same thing. It's the same thing. It's the same thing. Be strong and don't be weak. Oh boy. Oh boy. Oh boy. Boy. Yeah, there you go. Wall Street Journal. The White House pushed back on reports that Trump is considering a 90-day pause on tariffs. Well, this is ugly. This is ugly. And it's not getting pretty anytime soon. There's another post. Or what did he say then? Because I'm on his Twitter right now. I don't see anything. It's just the same stuff. Whatever he tweets on Twitter comes like an hour after Truth Social. So these were the last two posts. It was just, hey, Fed, lower interest rates and don't panic. That's it. I mean, if anyone has a link to the new tweet, then let me see what that new tweet is. But I don't think these tweets are going to be doing anything right now. Not right now. Dude, this is. We talked about it at length last night. Steve and Kris have some theories on how they think is going to play out. They're ultimately still bullish. Again, they think that this is a man-made error that can be reversed. I agree. I just don't feel like Trump has any level of remorse around this. He doesn't seem like he really doesn't seem like he cared. Maybe that's the persona you have to give when freaking you're negotiating or whatever, and you have to make it seem like you really don't care. But I mean, I don't know how this doesn't make you, this doesn't get the president's attention based on what we're seeing right now. Okay, do we have a new headline? Oh shit. Wow. Huh. It looks like Goldman Sachs was the reason for the headline. Goldman Sachs, Trump is considering a 90-day pause in tariffs for all countries except China. Dude, if this was Goldman freaking nutsacks right now, then you know the clients that just exited on that 5,200 S&P? Well, I would say they come from a well-known bank named Goldman Sachs. Wow. And this actually makes sense because I can't start that rumor. You can't start that rumor. Even CNBC can't start that rumor. Like, you need a well-known institution to pump that headline to get it to be trending across the business wire. Goldman Sachs, JP Morgan, that'll do it for you. That'll do it for you. I mean, if this is accurate, this was posted by a big account right now. If this was the report Goldman Sachs just sent out, oh my gosh. I don't even know if manipulation is the word, bro. It's worse than manipulation. Or it was an honest mistake by Goldman Sachs that misinterpreted what Kevin Hassett said to assume that there is a 90-day pause, even though we just looked at the video and he said nothing to the extent that you would take away any logical. A 3-year-old would be like, oh yeah, I don't think he's saying where there's going to be a delay. Like, so it does feel a little manipulative, to say the least. Palantir right there, up 3%, 76.85. S&P 500 up about 0.5%, 508.01. Take a look at this chart right here. This also explains how ugly this is looking. If the S&P 500 closes tomorrow where futures are right now, which was down about 3%, it will be the biggest 3-day sell-off in 38 years, a faster drop than any during either the global financial crisis in 2008 or the COVID-19 panic in March 2020. Again, S&P is green right now, so we've bounced from the absolute lows, but we've got more hours left in the day to see if it can actually hold these levels right now. The S&P is bouncing right now like that headline is real, which is weird, right? Like it's like the S&P is bouncing right now. It's half of where it was at the very top 20 minutes ago when the headline went viral, as if people are just seeing the headline and they're buying based on not knowing that the White House disputed it. I mean, that could be a possibility of what's happening right now. Or it could just be that people feel that we bought it. I mean, it could definitely be one or the other. But I don't know the reason for why we are turning green right here. It feels very fishy. VIX is dropping. That's probably helping right now as well. Shorts could be covering. Well, you know, it's an interesting question. If you're short right now, do you double down on this? Is this what you've been waiting for? Or do you cover? I think if you've been short since February, you cover. Like you don't get greedy, right? You probably made a lot of money. If you just went short on Thursday or Friday, I feel like you call BS on this and you double down. So I mean, there's a lot of algorithms and strategies being hedged against each other right now. And eventually in the coming days, we're going to see who ends up being right here. Trump did not tweet. Trump did not tweet yet. The last thing he said was that you should not panic. I'm updating his account on the side. I see no new accounts right now, or no new posts right now. Goldman Sachs, huh? Goldman freaking Sachs. Wow. Goldman Sachs. Global Banking and Markets Equity Reports, Goldman Sachs International, headline, Hassett, Trump is considering a 90-day pause in tariffs for all countries except China. Again, bro, that's not even remotely close to what he said. So it's crazy that was the headline. Let's go back to the professor and then we'll keep going from there. But here's what he said a couple minutes ago.
Also, you know, they don't have to be a slow-moving boat like the Titanic, like people think. They can move quickly and they should respond. The interesting thing is that some of the near-term data might not be that weak because we know there's a lot of advanced buying on the tariff. So we may have to wait, you know, a few weeks or even a month before we really begin to see some of that data that he is looking for. And by then, you know, that I'm not saying it's too late, but you know, that would hamper his ability to offset the coming recession.
Now you have your reaction function on the Fed, I would argue, can be a little hair trigger. There was a time not long ago you were calling for intra-meeting cuts, right? Are you going that far?
Well, not so far at this point because we haven't seen that weak data. But I mean, we have a big inversion of the term structure, and I think the May meeting should be in play. Most people are dismissing that, and I think I absolutely think it should be in play because the truth of the matter is, inflation signals are of less utility to the Fed now, because how much is it going to be tariffs and how much is it going to be excess demand? Well, it's not going to be excess demand. And that's when the Fed should really tighten, is when there's just too much spending by consumers and businesses and investors. That's not going to be the source of the increase. A supply shock, and a supply shock could not be reacted to. And that's why I'm saying that I think that May should be in play.
I just want to I want to cut you off because we're seeing some pretty dramatic action in the market right now.
That's when we reversed off the fake headline. So again, Jeremy Siegel in the same camp with Tom Lee and Bill Ackman and Dan Ives, which is that, hey, we've got to reverse the level of tariffs. S&P just went red again, and that reversal could be beneficial. Aaron, thank you for the $5 super chat. Isn't Grab's event at 10 a.m. April 8th? So technically it's tonight, 10 p.m. Eastern. That's actually a good point. I think you're right about that, Aaron. Yeah, you're right. Okay, so if the Grab event is 10 a.m. Singapore time, April 8th. Yeah, that is tonight. All right, so I'll be streaming it tonight. So, okay, so we'll try to do Robinhood Weekly from 9 to 10 instead of 9:30 to 10:30. And then from 10 to 11, we'll do the Grab event. All right, so if you're interested in Grab, 10 p.m. tonight, they're having their first ever product event. I'll be live streaming it if anyone cares about that event. We'll probably do Robinhood Weekly like 30 minutes early so we can get to it. Okay, so for everyone saying that the Fed's having an emergency meeting, by the way, Aaron, thank you for that. If not, I wouldn't have known. I would have waited till tomorrow. So thank you for that. I appreciate it. The Fed is not having an emergency meeting. The Fed was having a regularly scheduled meeting on April 7th, as they said they were months ago. It's just now that there's so much volatility, people are assuming there's some emergency associated with it, but it's not. Granted, are they going to be talking about what's happening in the markets? Yeah. And could they discuss the benefits of an emergency rate cut? Sure. But if the tariffs are inflationary, which is what Jay Powell said they are, he's not going to cut into an inflationary policy that is a lot worse than 2018, where they just put tariffs on China. I mean, this is the whole world. So regardless of their quote unquote meeting today, I don't think there's going to be any emergency rate cut. Also, it's stupid, bro. It's like that. Like, this is not the emergency. Let me. I think everyone can agree on this right now. And if you can't agree on this, then I don't know what to tell you. If there is a recession, it's a Trump recession. It's not a Jay Powell recession. It's not a Harris recession. It's not a Democrat recession. It's not a Republican recession. It's a Trump recession. It's just that simple. And this is not even some like political thing I'm putting out there right now. I'm just saying the way this will be characterized by the left and right media is that, I mean, Ben Shapiro, who's staunchly on the right on the All In podcast, vehemently went against these tariffs. And the reason for that is because even he, who is, an avid Trump supporter, realizes that this policy simply will be characterized as one of the most idiotic policy mistakes that the administration has made, or that any administration has made, in the past couple of decades, because it's self-inflicted. Like, I still don't blame Trump for COVID. Like, when COVID happened and everyone's like, oh, Trump lost so many jobs. It's like, yeah, of course he lost jobs. There was a global pandemic. Like, of course, like that's just disingenuous to blame Trump as losing all these jobs when there's a freaking virus killing people. Like, obviously there's going to be some job losses there. And why did Biden gain so many jobs in 2022? 500,000 a month, because we were rebounding from the pandemic. And I think we have to be fair there. But if we are to lose hundreds of thousands of jobs, millions of jobs because of this tariff policy, I think the blame is going to go solely on Trump. And I don't think anyone's going to be able to sugarcoat the way out of that narrative. Which I would hope Trump doesn't want to be seen as the guy that is unilaterally blamed for this type of recession. Like, I would imagine he cares more about his legacy. But who knows? Who knows at this point? Michael says, bro might cause a recession in his first 6 months. Low-key impressive. Dude, all you can do is laugh about it, right? All you can do is laugh about it. Here's what Ben Shapiro said over the weekend around the tariffs.
Yesterday, President Trump declared that it was, in fact, Liberation Day, his giant tariff policy that he just dropped on the market unilaterally, probably unconstitutionally. Trump's reciprocal tariffs impose hundreds of billions of dollars in new taxes on Americans, be the largest tax increase since the Revenue Act of 1968. One of the biggest tax increases on American consumers in the history of America. And it's going to cost American consumers. It will cost American producers who use inputs from other countries. The Dow Jones Industrial Average plummeted immediately more than 1,000 points. The S&P 500 plummeted more than 3%. The NASDAQ plummeted almost 4.5%.
And that was only on Thursday. We are well below those levels. As you can see right there, Ben Shapiro, not really a fan of the tariffs. Again, Ben Shapiro is a small government guy, and he understands that when you impose taxes, he's more of a cut spending versus worry about new ways to raise revenue. His big thing is like, hey, we have too many entitlement programs. So he is ideologically opposed to this. And obviously you have a lot of people that are also not defending it, even if they're fans of Trump. All right, are we still green? No, we're red. S&P is red. Palantir is still holding on a little bit. Amazon's up 2. Qs are up a little bit. Broader market is still pretty red right now. Looking at a couple other headlines right here, just trying to piece different parts of this together. We're still green for the day across most stocks. I wonder if we would have reversed if we didn't have that 90-day headline thing. Like, I wonder if that was just like a jolt the market needed to kind of get back to a little bit of normalcy, or if we would have still been tanking. Gold, is gold down today? Let's see. Gold is down 1%. Wow. You might have people selling some gold to cover their margin calls. I would imagine there are plenty of margin calls being sent out on a day like this. Where is MSTR? MSTR down 5%. Where is Bitcoin? I still think 77. Bitcoin 78.5. All right, Bitcoin's actually green. Bitcoin holding up within this pain. Fake news gave us a bottom, maybe. Could you imagine, bro? Fake news gave us a bottom. This is... Okay, here's another question. Here's a question. Let's see. Here's a question. Okay, so... okay, let me post this here. Here's a question. I'm curious what people think on this one. I think you guys know my answer to this. Oh, Trump's going live in a second. What? President Trump participates in a visit with the 2024 World Series champions, the Los Angeles Dodgers. Okay, so I wonder if they're going to ask him about tariffs when he's with the Dodgers. Who knows? Maybe he takes questions there. Okay, so 59% of you said we're not going to get a full recession in 2025. Here's my question. Do you think that, or sorry, better way, do you still support the way the Trump admin is implementing tariffs? AKA, how many people are in the Chamath Palihapitiya camp, which is, yup, S&P, by the way, back below 500. We agree with what Trump's doing. There's going to be some short-term pain, but it doesn't matter because eventually it'll work out, and you're kind of supporting this policy regardless of what happens to stocks. My answer is no. I think this is absolute nonsense. And that's my look. I've supported Trump on a bunch of different policies that I thought were effective. And this is a policy that or an approach I don't think is effective. Now, granted, I'm not the president of the United States, so maybe he knows better than me and he's going to implement something and I can't exactly see what's happening, but I'm not even against tariffs. The way the tariffs are being implemented is what I'm against on this. And so I think if we can't call out crappy policies, if we have good merit to believe that they're pretty crappy, then at that point it's just a cult. And I think this is stupid. I really do. And if all of this is for nothing, because we're just going to get right back to the same deals we had because you couldn't get any new deals done and he just reverses, then I don't think the American population will appreciate it. 77% of you say no. Interesting. All right. So 24% of you say yes, we support the way the Trump admin is implementing tariffs. The majority of you say no. Oh boy. And that's the other thing, dude, like Vietnam, Thailand, Cambodia, all those deals that some of the media is pointing to as like a win. We don't do enough trade with those countries. I mean, yeah, we have relationships with them, but it's not China. It's not the EU. Oh, we just got a Trump tweet. All right, here we go. Dude, this is crazy. This is crazy. All right, here we go. It's a long one. You guys ready? Posted at 11:14. All right. Yesterday, China issued retaliatory tariffs of 34% on top of their already record-setting tariffs, non-monetary tariffs, illegal subsidization of companies, and massive long-term currency manipulation, despite my warning that any country that retaliates against the U.S. by issuing additional tariffs above and beyond their already issuing long-term tariff abuse of our nation will be immediately met with new and substantially higher tariffs over and above those initially set. Does this guy know what a period is? That was the most run-on sentence I have seen in my... I was talking for like 30 seconds. Therefore, if China does not withdraw its 34% increase above their already long-term trading abuses by tomorrow, April 8th, the United States... the United States will impose an additional tariff on China of 50% effective April 9th. Additionally, all talks with China concerning their requested meetings with us will be terminated. Negotiations with other countries which have also requested meetings will begin taking place immediately. Thank you for your attention to this matter. Did you just say thank you at the end? Like you were on a call with like someone at your bank trying to resolve an issue. It's like, thank you for calling. I appreciate it. Like, what is going on right now? I'm about to tweet this right now so you can so everyone can see this. Did he just say we're doing an extra 50% on China? Isn't it already 54%? Oh no, it's 34%. So, but we already have 20%. So if he goes from 34 to 50, it'll be 74%. That's why the markets are going below 500. It was this tweet, folks. I think, yeah, there you go. S&P 496. I think it's off of this tweet right here of doubling down on tariffs on China. Okay, Trump just now. We will increase our tariffs on China to 50% on April 9th if China does not withdraw its 34% retaliatory tariffs. Oh my goodness. Oh my goodness. This is comical at this point. This is comical. Yeah, so it's going to be 74%, guys, because if it's not 34 and it's 50, we already have 20. That's where we got the 54% number last week. Now it's 74. 50 plus 24 is 74. We will increase our tariffs on China to 50% on April 9th if China does not withdraw its 34% retaliatory tariffs. Here's the post for those that haven't seen it. This is just, I mean, I think it's really, he's governing through tweets now. And I think the most avid of avid Trump supporters, especially if they're older and they've got retirement accounts, I don't think they're going to be happy with this. And I think they're going to make it known to Trump that they're not happy about this. Okay, so I saw a headline last night about Taiwan. I mean, dude, I don't want to fearmonger, so I'm not going to spend a lot of time on that headline. It's not necessarily real, but as a thought experiment, the article essentially said, hey, if China was ever going to invade Taiwan, now would be the time. Massive economic uncertainty. We've isolated a lot of our allies in terms of the United States. Geopolitical unrest. China's economy is in the gutter, which is one of the reasons they wouldn't invade Taiwan. But if our economy goes in the gutter with them, if this actually turns into some global financial crisis, I mean, if you needed a perfect opportunity where everyone was caught off guard to invade, the article was basically saying this would be the time. Now, look, I don't think that's going to happen. I think that's pretty extreme. Could it happen? Sure, everything's a possibility. But if that happens, we don't have to worry about our stocks because, you know, we have a lot bigger issues at that point. But it just goes to show how aggressive this could end up becoming. S&P 500 just below 500 right here. 499.5. Palantir still holding up 74.50. A little green, but still down from that 82 level that it was at. This is tough, dude. This is tough. This is definitely tough. Again, in the next 5 years, I think this will be a blip. I think we'll move on from it. I don't think it's going to be as bad as it is right now. But obviously in the short term, it is pretty ugly. And you know what? Steve sent me this video last night. I mean, if it actually ends up turning out as bad as it is, this is going to be a clip that goes viral. And I don't know if JD Vance is going to have as easy of a shot of winning in 2028.
What Goldman Sachs has said is that Donald Trump's plan would make the economy worse. Mine would strengthen the economy. What the Wharton School has said is Donald Trump's plan would actually explode the deficit. 16 Nobel laureates have described his economic plan as something that would increase inflation and by the middle of next year would invite a recession. You just have to look at where we are and where we stand on the issues. And I'd invite you to know that Donald Trump actually has no plan for you because he is more interested in defending himself than he is in looking out for you.
You know, that last sentence, more interested in helping himself than looking out for you. Trump launched a meme coin, guys. He launched a freaking meme coin, grifted, rug pulled billions of dollars from average people. I mean, look, I'm not the biggest Harris fan in the world either. I do think like things like the wealth tax and some of this stuff was kind of insane. I also think that Trump is doing some things that are also insane. But I'm just saying from a purely objective political perspective, what is going to be the narrative in 2028? The narrative is going to be the dude launched meme coins and his son and his kids and his compadres got rich off of the crypto grift. And number two, he tanked the economy. And if that's the narrative, I mean, I don't know if 2028 is going to be easy for Trump. And no, I'm not a communist because I say this. I mean, for those calling me a communist, I mean, like, I don't know what to tell you. Like, I'm against the wealth tax. That was one of the biggest issues I had with Kamala. It's very well documented on the show. I thought it was the most idiotic idea of taxing unrealized gains. But still, it's not like this tariff idea is that much smarter. So, I mean, like, you can be objective here and call shit out. And all I'm saying is, like, if it does get us into a recession, yeah, that clip's going to be going viral. And people are going to be framing it as a Trump recession. So I think eventually we're going to have to see how this ends up playing out. Trump just tweeted about China. Yeah, we just read it. He's saying 50% on China, which makes no freaking sense, dude. This is not going to happen, bro. Like, we're going to have 74% tariffs on China, really? And I know he's trying to be this aggressive. It's like poker, right? He's trying to really get you to call his bluff. And because China's economy is not in the best situation, maybe they do end up calling the bluff. But based on everything I read from Beijing over the weekend, they have no desire to negotiate under these circumstances. Under these terms, they're like, screw this, bro. Like, I don't know if you can necessarily blame them. I don't know if you can negotiate effectively with stuff like this. There has to be some level of a middle ground here. But I guess over the coming months, we're gonna find out. Let's get a little bit more coverage, and then we'll keep going from there.
Movement at all. This morning, Navarro on our air, no movement at all. And now this 90-day pause thing, at least if it's some other source, I don't know. But if it's this source, there is no comment on a 90-day pause. And you're right, Sarah, guys. It's just one full screen I'd like to put up from what I had already originally planned to do, which was this is a flash Fed survey we did. It shows that 56% of our respondents believe, or the 56% probability or average probability of a recession. That 33-point jump since January is the largest we have ever recorded in the many years we've been doing this. And there's the Fed's dilemma, Sarah. You know it. The outlook for GDP down 1.7. The outlook for CPI up about a percentage point. The Fed is just not going to be happy with that.
Why are you guys saying 104% on China, not 74? My logic is he's replacing the 34 reciprocal tariffs with 50. So 50 plus 20 gets you 74. If you guys are adding 50 to the 54 that's already there, that's how you get 104. I didn't read it like that. To be honest, I don't know if there's any difference between 104 and 74. It's going to be bad regardless. Oh, you're doing it this way, 34 plus 50 plus 20? All right, well then 104. I mean, let's see. It's just, I can't even say that with a straight face because it feels like it's ridiculous. It makes no sense. But
Whether it's 74 or 104, obviously the markets would not like it.
I think there's a good discussion to be had, Sarah, as to the extent to which a rate cut or two would help. And then the concern is, would it hurt? And Powell was very clear that they have an obligation at the Fed to make sure that initial or primary inflationary impacts of tariffs do not become secondary, even while the market is out there betting on 4 rate cuts. I think it might be aggressive.
Yeah, market telling you that the growth worries outweigh the inflation worries at the moment. And I did think it was interesting how Powell answered that on Friday, where he said, look, if we have, he really spoke to this, dueling parts of the mandate. In other words, high inflation away from the target and lower growth or unemployment away from the target. How would we respond? We would look at which one is farther away from the target. And I wonder what you make of that, especially because unemployment tends to be a little bit lagging.
Right. So you're right. And it's actually even a little bit more complicated than that from the Fed's point of view in the following way. First of all, you're absolutely right. And the Fed goes back to its statement of principles when it has this dilemma. But the other aspect to it is the outlook for it. It's not just the existing data. So let's say you're in a position where they're both, one is further than the other. What's the outlook for both? So the Fed is going to have to rely on the existing data, which, as you say, the employment data can be lagged, but then also the outlook for both and decide.
And the outlook for both will be inflationary if we have tariffs. We got a news update right here. Let's go right here. This is the China stuff that Trump just talked about.
Tariffs as high as 54% against China are set to kick in. On Thursday is when China's 34% retaliatory tariff is set to take effect. The president is saying now that if that retaliation takes effect, that he would go forward and impose an additional 50% tariff on China, also effective on Thursday. So if we add those up, it was 20% fentanyl tariffs, 34% so-called reciprocal tariffs, now an additional 50% on China if they move forward with their retaliation, over 100% then for this term alone that the president would be imposing in tariffs against imports from China. He also says that all talks with China concerning their requested meetings with the U.S. will be terminated. So not willing to negotiate at this point. He says that he warned countries not to retaliate against these tariffs. And because China is taking these significant steps towards retaliation, that he would up the ante even further, as he did vow to do. It was written right into the executive order that he would escalate things even further if he needed to. Now saying additional tariffs on China of 50% effective on Thursday. Carl?
Megan, kind of reminds me of what Bill Ackman wrote a few days ago now, and that is sometimes it's a fierce negotiating strategy to have.
All right. So, yeah, 104% tariffs. Now I know how you guys got those numbers. That would be aggressive. Kris. Okay. Kris said to call him. Kris, I'm calling you right now. You can pick up if you're good. We'll get Kris on the show, get his thoughts about this. Yeah, 104%. That would not be the best. That would not be the best. Kris, good morning. How are you?
You've reached Kris Patel.
Okay. Kris is not picking up right here. Let me text him. We'll get him on in a second. We'll get his thoughts. Let's keep up with that coverage, and then we'll keep going.
Your opponent think you're absolutely crazy.
He did write that, and maybe that's what this White House is thinking. Or maybe, as we were talking a little bit about last hour, this is something the president deeply believes in. He really thinks that, especially when it comes to China, that the trade deficit is damaging to the U.S. It's about a $300 billion annual deficit these days between the U.S. and China. The president said last night that he would not strike any sort of deal with Beijing unless and until that deficit was erased, which is not something that's set to happen anytime soon. 104% tariffs maybe would start erasing the deficit, but maybe because there would just be almost no trade left between the countries, we would have to see exactly what the impact would be. Clearly escalating things here to a point that seems deeply unsustainable, deeply shaking up the economy, I would say, reconfiguring global trade as well. So a lot of time left between now and Thursday, but that's what he's vowing at this point would happen.
And if you're a retailer or any company that sources your materials that you sell to American consumers, American companies, Walmart, Nike.
All right, we got Kris on through StreamYard. Kris, good morning. How are you, brother?
Oh man, this is just on another level. So this is a full-on trade war, dude. It's something that Buffett said, like, hey, this is a trade war, and we literally have our president basically saying and threatening China, saying if you don't do this, we'll do that. And it's pretty bad. Like, I mean, literally, this is one guy's ego right now driving this. Okay. I'm like 99, maybe 100% sure that there are people in his like cabinet that are absolutely going insane right now, saying, what the F are you doing? Like, you literally believe in your God-given power to be crazy in order to negotiate. And this is not even negotiating at this point. This is just ego driving the situation.
Yeah,
And
how does China negotiate with 104% tariffs? Like, what is there to negotiate at that point?
there's nothing to negotiate. I mean, this is literally like one strong man versus another strong man kind of thing. Like, Xi Jinping is not looking to look like he's weak, and Trump is like, I'm gonna make you my bitch, And it's as funny as it sounds to us, what Trump is doing is breaking the current system, and he's like not only breaking, but he's decimating it. Now the thing is, the world and a lot of the other countries are going to have a like deep choice, like, how are we going to proceed about this? Because you're going to have two camps line up. You're going to have the pro America camp, and then you're going to have the pro China camp. And the thing is, the pro America, like, if Trump only did this to China, we could say, what, this is, China is like the largest exporter and the one we have the most trade deficit, but we also have the same issues going on with Mexico and Canada and even some of our stronger allies. So it's like, what is going on here? So I don't know, like, Trump is blowing up the pretty much the world's trading system right now. Like, and it's really bad because you're basically tanking any sort of stability in the current markets.
What do you think of the 90-day pause headline and how that played out today?
I think that was wishful thinking on whoever said it. And the thing is, it caught fire. The real thing is the Trump administration immediately backed off, which to me, when I look at it in hindsight, means that they are not willing to give up a single bit of leverage in all of this right now. So this was like, whoa, what do you mean there's going to be an exit? No. It's almost like saying we're going to war, and then someone saying, hey, guess what? There's a pause on going to war. And people are like relieved, like, oh, thank God we're not going to war. And then someone's like, no, wait a second. No, we're going to war. That was wrong. So the markets are probably going to move down further.
What do you think of what Chamath just said? My current view, Trump lets tariff reactions play out for a few weeks, sees the trend of capitulations, and is emboldened to keep going. He fields offers from everyone, negotiates with no one, and then he essentially brings in a ton of people, has some negotiations. We get a piecemeal with 80 countries. And then he says, I don't buy this whole end of U.S. hegemony. This is the moment to go for the juggler and establish a world order around America.
That's wishful thinking on his part, man. That is wishful thinking.
Basically, Chamath is saying, now we need to tell the world how strong we are by imposing these aggressive trade restrictions, and that will solidify our strength across the world, is essentially his argument.
Yeah. I think this is embarrassingly dumb, the way that they're proceeding with this. And literally, it's a game of like, who's going to blink first. And the challenge is you're basically risking the economy, So I don't know, like, the world order is definitely going to change, in my opinion. I don't think the U.S. is going to be top dog in about 10, 15 years anymore. I just, because the thing is, like, you're an unreliable trade partner. And if you're able
I wouldn't go that far. I wouldn't say that they're done. I would say this is reversible, which I think you would agree with as well. Or do you think the lasting damage of this truly means the U.S. is not reliable anymore.
Oh, dude, the U.S. is not reliable. Like, there's no way any other country right now is looking at this whole situation and saying we want to deal with this ever again. So what you're going to see is more and more countries starting to kind of be like depend on themselves. They're not going to want to try to risk being in a like a trade relationship with other countries, which case they could be blackmailed into certain moves economically. I mean, bro, this is economic war. All right, it's not something that people should take lightly. Like, this is trying to recast the entire planet into thinking in a certain way. And if people think the ultimate goal is US hegemony and all of this, dude, who wants to deal with a hegemon?
So then what's the goal of this if it's not U.S. agenda? Like, what is the point of all of this?
Well, I mean, the point is to try to impose hegemony, okay? But that's the Trump thing. Trump thinks that this is the way to move forward. And I'm sure that there's a bunch of people, that are going to be like, my dear leader is absolutely right. I love Trump because Trump is a strong man. But dude, that's not how you conduct business, Like, there's a difference between, making allies and basically just being a tough man all across the planet. I mean, eventually people will, like I said, right now people are going to come to the table. They'll say whatever they have to get Trump to back down, but in the background they're like, fuck this. Long term, we need to stay away from these American clowns.
Yeah, I mean, look, I don't think America is going to lose all of its power or anything like that in 15 years, but I do agree. Obviously, countries will have to realize that they're going to have to be a little bit more stringent in terms of their relationships with the U.S. because things like this could happen. Do you think the Republicans are going to let him impose these tariffs, or do you think there's going to be a way they stop it?
I don't know, dude. That's a good question. There are some that are willing to stand up and say, no, this is stupid. Like, we shouldn't do this. But for the most part, it seems like most Republicans are absolutely, you know what, I'll just say it. Most Republicans are pretty much cowards at this point for allowing this to go on as much as it has, I mean, and believe it or not, if the Democrats were in charge, there's a bunch of Democrats that are cowards too. Like, there is no, this is where we are in the political system now, where it's more important to back the party over the country, so about 80 to 90% of Republicans are probably just going to follow Trump's lead because, the party bosses has basically told you what to do and you're going to do it. And then, it's just the 10% that stand up don't have enough collective power to work with the Democrats to get this resolved. And I don't even think that there's appetite from the Democrats because they're thinking probably, holy shit,
let
Trump,
it burn. They're thinking, let it burn, right?
Yeah, exactly. Let this thing implode on itself, and basically we'll pick up the pieces and we'll look like freaking saviors when all of this is done. I mean, the Republicans are pretty much headed for a bloodbath in the midterms if this goes on for maybe like another 90 to 100 days, and we'll see where things go after that.
It's really interesting right here because I also, okay, so let me get your thoughts on this. You had Jamie Dimon, you had Bill Ackman, Dan Ives, Tom Lee. I can name many, many more big Wall Street names.
Yo, play Trump. Let's see what he says. I think he's live.
No, but he's live with the LA Dodgers. It's not, I don't think it's going to be anything exciting. But my question here is, all the big Wall Street guys are freaking out about this. Is that like, do you take a contrarian spin and say all of those guys are stupid, we should buy the dip? Or is it kind of, no, Jamie Dimon speaking out about this with Dan Ives and Tom Lee, like, this matters. Like, they've never been this bearish and we should look into that more seriously.
No, the challenge is you're breaking credit markets, dude. People don't realize what exactly happened. I know a lot of people in the comment section, they're like, oh, you're a clown, sell the news. Like, I'm not selling because I know that capital markets have way more power than Trump's ego does. Eventually, markets will recover. That's just how things work, okay? The challenge is people don't understand that what he's doing right now can cause a full-blown recession and cause millions of people to lose their jobs, to lose their livelihoods, to get pretty much put on the street. Okay. You do not want a situation like guys like me. I'm going to be fine. You're going to be fine. Most people are going to be fine. But there are going to be a huge subset of vulnerable people. They're going to be put in a very, very difficult position, all because this person feels like he knows how to negotiate a fair deal, which doesn't even make any sense to me because like whatever. The point is, I think the consequences of this on the average person is what we should all be focusing on. And Trump just doesn't care. He's like, no, I have a theory and I'm going to go with it. I'm going to go with my gut. But and the funny thing is, I've sort of like in the past defended Trump, like, oh, he's a businessman, he knows what he's doing. But after the Trump meme coin thing, and then looking back at his history of bankrupting some of the casinos and this Trump stakes thing and Trump University, sometimes I think he actually plays a little too close to the edge, and he's had some level of success in one parts of it, but he's also had a lot of failures, which leads me to believe that he isn't afraid of failing. And I think that's the one thing as a business person, when you're in business, you should be afraid to fail because there's people under you that can be impacted by that failure.
Do you think this is his last hurrah and he really thinks he can pull this off and he doesn't care what people think? I mean, look at him. He's laughing, enjoying the time with the LA Dodgers. He's not acting like the market's down 20%.
I mean, I feel like internally, he's definitely losing it. He may be putting on a pretty like, whatever face, but I'm telling you, his cabinet secretaries, they are absolutely losing it right now, trying to defend, trying to deal with this. But the only saving grace that I would say is that if this is some kind of master plan that has been, in the back of the discussion, maybe that's why they're not panicking, but I don't know. I'm at, like I said, at this point, I'll say it 100%. I regret voting for Trump. I think that, he's not a good steward of this country's economic policy long term. Maybe even if he gets a victory out of this and markets recover in the short to medium term and we get back to some level of semblance of reality, the long-term consequences and long-term damage that's been done by this president is going to reverberate not 5 years, not 10 years, but probably 20, 30 years from now.
It's aggressive. It's very aggressive. But I agree with you, and I think a lot of people agree with you, which is that we're not selling, right? Like, as mad as you are at Trump right now, you're not selling because this market can bounce within seconds. And so can I. So do I. I think a lot of people think that as well. But as you said, the long-term effects of this could be pretty bad, even if we get a
Well, the reason why is because one great thing is that we live in a democracy where we don't have to, we still have exit mechanisms that are in place that allow for this thing to basically stop, right? So number one, we do have power among our business leaders to basically put pressure on local governor, on representatives in the Senate and the House, who could immediately take back the power if things get bad enough. So there is sort of a put there, where, even if Trump pushes the button, Congress and the Senate have a way to just cut the cord to the button, if things get bad enough. And I think eventually that could end up being the case. Like I said, there's one thing that we do have to believe in, which is ultimately capitalism. Capitalism always is going to win. And basically, and yeah, I'm not selling anything. I'm holding all my positions that I have. I do wish I was a little bit more hedged. But that's just how things are.
Yeah, I think it's okay to be objective and critique. I mean, Kris literally voted for Trump and he's critiquing him. You can call that emotional, or you can say, hey, the markets are down 30%. Maybe it's time to put a little bit of a critique out there. And I think you're going to have a lot of faithful that would never critique him, no matter what happens, even if we fall another 20%. But the silent majority might end up changing their vote silently, because I don't think anyone wants to tolerate this if it continues. Now, obviously, we think we're getting close to a bottom and we could recover, but if this is the tariff, if we have 104% tariffs on China, yeah, I agree, dude. If this leads us into a recession, obviously the midterms don't look the best for the Republicans right now.
Take a look at what Brad Gerstner posted, because I think that's somewhat important too. Because the thing is, and a lot of people agree that tariffs should be implemented, but the way that this is being done is really bad.
Yeah, and I hope supporters of Trump also realize Brad Gerstner, who's been a Democrat the majority of his life, became a Republican to vote for Trump. And when he's speaking out, like, you can't just say, oh, he's emotional. like this is something where he was never going to vote for Trump or a Republican. He switched because of the unique situation we were in 2024. And if they're speaking out, it's because they're speaking out for a reason. He says, Navarro nuclear-style tariffs is not what people voted for. They will break the U.S. economy and not make us great again. CEOs support pro-business Trump, who promised precision-guided, truly reciprocal, smart tariffs that level the global playing field. Obviously, that is not an endorsement of tariffs.
Yeah. No, I mean, and I think every business leader is pretty much in the same boat right now. And just saying, like, this is just absolutely ridiculous, the way that this is being implemented. And, you know, this whole thing with trust us, we know what we're doing. My thinking is, dude, you've got literally, you're fighting against 150 years of economic like theory right now, where you've actually seen the consequences, whether it was Smoot-Hawley, whether it's other countries trying to impose tariffs at the grand scale and end up ultimately failing. I mean, this is where we are right now. You know, we've gone insane at the tariff thing. And this is the first time in a long time I feel like, you know what? I think the executive branch has way, way too much power at this point. And it happened under Obama, it happened under Biden, and it's happening under Trump now, where politicians don't even have to go to Congress. They can just do everything by executive order, you know, declare national emergency and just do everything. Like, come on, that's not how you run an economy. I mean, that's not how you run a country, you know, because at that point, we're pretty much in a dictatorship, you know.
Kris, what do you think about this 10-year? I mean, this can't be good news for the administration right here.
Well, the 10 years bad. Like that's you know, the markets are basically looking at this and saying, no, this is actually inflationary. Like, the market before was thinking, oh, well, you know what, some of these things will be rolled back, whatever. Now bond traders are getting nervous and the credit system is starting to break down. Look at the tweet that I put up there like an hour ago. If you see, like, basically credit spreads are widening at some of the fastest pace in history right now, right? So we're already, and let me explain credit spreads to people, okay? The way that high yield credit spreads work is that they are an indicator of risk, okay? So basically what you do is you take the high yield bonds that are out there, like corporate bonds, and what you do is you subtract the risk-free rate of return, which is the
10-year,
right?
10-year, yeah.
Well, it's not the 10. It's around the 10-year, right? And now what you have basically is an understanding of how much risk you're willing to accept in order to buy that bond. The reason why is because usually companies that are high yield are impacted by recessions way more, right? And the thing is, the cost of capital is what ultimately drives their business fundamentals. So if the belief is there that, you know, we're going to get into a recession, people are not going to be lending money to these institutions, right? And if you don't lend them money, how are they going to invest in different things, right? So if you're, let's say, if you're a business, you're not exactly like the top line company, but you're a good company, and you go out there and you want to borrow money, and if someone says to you, sorry, I can't lend you money at 4% or 5% or 6%, I'm going to have to charge you 12%. That could be the entire margin of that business.
Right.
And what ends up happening is, if you basically charge that much, they have no choice but to just say, okay, well, we're going to have to do layoffs. We're going to have to fire people. We're going to have to get efficient. And because of that, now you have people losing their jobs. And once people lose their jobs, that kind of causes more people to lose that job that service those people. And so you never want to get into a position where credit spreads widen so much that that availability of credit starts to impact people's earnings, and then eventually the companies themselves, and eventually the people that work for them. Usually when credit spreads widen like this, it's something that happens that isn't correlated to some policy action like this, right? So if you look at past credit spreads widening, the tech bubble, when that burst, so the economy was going into recession. Then you had 2008 with the subprime crisis that caused huge credit spread widening. Then you had the oil issues in 2016 where a lot of oil companies went bankrupt because the price of oil dropped down so much. Because the OPEC nations, they started dumping oil into the what do you call it? They started to pump way more oil. Then you had 2020 with the pandemic, right? So this is why at this point, all the major banks are saying we pretty much going to get a recession.
Yeah, and you can't blame them, right? I mean, they're just looking at their models and they're saying, like, I still, to an extent, believe that the third grade math the administration did to come up with these tariff rates is not going to go into effect in a couple days. I'm probably wrong about that, but Goldman Sachs can't just assume it's not going to go into effect. If Trump said it's going into effect, they have to tell their clients, this is what we think is going to happen if it goes into effect.
Pretty much.
And the answer is a recession at that point.
Yeah. And unfortunately, this is where we are, in all of this. So, I mean, yeah, like I said, I'd be very shocked if I didn't see more Republicans starting to stand up, because they're definitely getting leaned on by their constituents. Like no one wants to deal with this nonsense. Sorry, go ahead.
Is there an argument that this really does need to be a detox period and we really need to get the glut out of the system? Like there's any way you could justify it to your constituents if you are elected?
What glut?
The deficit, the spending, the lack of fair trade. Like, could you go to your constituents and say, hey, I know it hurts right now, but Trump really is looking out for everyone long term?
Is this how you develop an economy long term, by crashing everything?
I mean, probably not. But
yeah, I mean, you want to grow GDP, you don't want to shrink it. The thing is, tariffs, if used correctly, they work. At least I think that they would work. I'm not 100% sure on that theory also. But the thing is, you need the economy to grow. Without the economy to grow, you're just making us poor,
Yeah, but you agree that the deficit and government spending is bad. Like you're on the side.
No, I'm 100% in agreement with that. Like that's why I'm supportive of Doge. I think Doge did a good job taking a lot of excess spending out of government, right? Like, but I hope people in the chat, everyone right now who's like super like, oh my God, like no, Kris is wrong. You're gonna say Kris is wrong, and I totally think that's fine until you actually feel it yourselves. Once you start losing your jobs, your neighbor starts losing their jobs, people can't afford to basically buy things anymore. That's when things are gonna really break, And I don't know
that's if we have a recession, essentially.
Well, we'll see. We'll see in the next few quarters. The challenge is that's not something that you want to see.
No, of course not. Yeah.
That's
my point here. It's like, I think we all agree there's issues with the economy when it comes to debt and the deficit. We need to resolve those issues. And I think any Republican elected congressman could easily tell their constituents, like, obviously this is not good for your kids. We want to keep the country alive. But the way in which they're going about it, I think, is going to be the pushback from a lot of voters of just like, well, why did he have to do it this way?
Yeah.
And I think if it's a full-on recession and they have to give them some academic theory about, well, we needed bond yields to come down, so we needed to crash the markets, I don't think anyone's buying that. Even though maybe that's what ends up solving this, I don't think the voters are going to agree with it.
I don't even think that can solve it. I think it actually makes it worse right now. Like I said, if your GDP starts shrinking, right? And how are you? Trade deficits are bad. I get that. But what's worse is GDP going down and shrinking. because once it starts cascading, it can really, really wreak havoc. Okay. And this is literally like a game that he's playing. And the other side of this is probably Jerome Powell. And Jerome Powell's like, this motherfucker's putting me in a really bad position, you know? Because I mean, at this point, like even in this morning, he was already like, oh, Jerome Powell needs to lower rates. Inflation's dead. And he could be very right, where inflation is down. Okay. But all this tariff thing, all this is doing is increasing future expectations of inflation. And if future expectation of inflation goes up, bond yields are going to climb with it. And this is why we're seeing the 10 and 30 year starting to climb also.
You're not wrong. You are not wrong at all in terms of why the markets are pricing in this much level of pain. And I think also the markets are being like, the markets are a calculated way to just tell you what they think. And right now they're obviously telling us this is not the right policy that they think would be good for capital markets. It's a question of if Trump cares.
Yeah.
I don't think we'll know. Let's switch over to him real quick. He's with the Dodgers. I think he's ending out his visit right now. Oh yeah, it's over. There it is. So he took no questions from the media. So we're not going to get any tariff headlines there.
I'll be honest, I miss Sleepy Joe. At least we all slept that night knowing Sleepy Joe was, oh God, what are you going to do?
I mean, look, I really appreciate the transparency by the Trump administration. One of my biggest issues with Biden is that he never talked. And I just like, as someone who cares about free speech, as a creator, I feel like you have to be transparent with your audience, all this stuff. And Biden was, barely live, especially in the last 2 years of this. But Trump's live. Trump's taking my job. He goes live 5 times a day. And then he says a bunch of shit. And it's aggressive, dude.
This China thing is definitely an escalation, man. I mean, the funny thing is he's going to put a lot of pressure on China, and I don't know how China's going to end up responding to. I mean, look, the Chinese definitely need to increase their consumption. Okay, if they increase their consumption, they would actually be better off. Now, the thing is, the US has, we do have firms that have business in China. Okay. Our tech companies are not allowed in China, but everyone else is there. Like there's Costco in China, there's Nike in China, there's Tesla in China, there's GM, there's Ford. All this thing they do exist in China. So a lot of these companies are going to have a tough time dealing with the fallout of this during their earnings. And the markets may not exactly like it. And
what do we think is happening with earnings now? Like I feel like Q2 is messed up for everybody.
Well, Q1 numbers may not be necessarily messed up because this is like this happened kind of towards the end.
Q1 numbers will be good, but Q2, I don't know how any company can.
Well, forward guidance is going to be absolutely shit. There's no way you can guide. I don't even think companies are going to be able to give a guidance because they don't know what what this is going to be like.
Yeah, like if you're Carnival Cruise, how do you say you're confident that people will take cruises if you don't know if there's going to really be tariffs, right? Like,
I mean, I'm sure that there are going to be some companies that are going to have a little bit of visibility because maybe like the tariffs are not necessarily impacting their business so much. But there's going to be other companies who have to deal let's say you're the CEO of Walmart. Okay. How do you explain, hey, the Trump administration just put 100% tariffs on goods that we buy, right? And the thing is, like, Walmart gets about, I'd say, 70 to 80% of their inventory from China.
Yeah.
How does Tim Cook come out there and explain, like, hey, sorry, the next iPhone is $2,000?
No one's buying that damn phone. I mean, it's just that simple. Like,
yeah.
And there was a headline the other day that Walmart's negotiating with some of their Chinese suppliers to not, put input.
You can't negotiate 100% off.
Yeah. That's not how it works. But so the end result is consumers bear the cost of that, right?
Yeah, obviously. This is the largest tax hike in the country, and you know what? People at the low and medium level are going to be paying majority of this, basically.
Well, that's the really sad thing about this from a market's perspective is that if you're rich, you can buy the dip because you've got plenty of money. And we're talking about rich, right? Like top 1%. You've got plenty of money to buy Nvidia and Robinhood and Pound.
Let's screw the investor class. I'm saying the average person. If you're the average person and you're trying to buy a pair of shoes and now they're double the price of what they were a year ago, you're going to feel it. And that's basically what's going to happen in the short term, where prices on things are going to go up. I'm telling you, this is a tax on poor and middle income people. Okay. The rich, it's a tax on them too, but it's very, very small compared to anything else. This is based on think of this as a consumption tax, because that's essentially what's going to happen. It's a consumption tax.
Yeah, and piggybacking off that, if the administration, which they keep touting, well, if you didn't have a chance to buy stocks, well, now you have a discount. If you can't afford, sneakers that are double the cost, you're not going to buy the dip, which is my point. Like, only the wealthy are really going to continue to get wealthy, because even though they're down hundreds of billions, they have disposable income to then buy the dip and then recover.
Yeah. Yeah. And then all this other talk that so this is the other thing too. They're like, oh, we're not going to do tax on Social Security. I'm like, which person that's on Social Security right now is making like $100,000 a year where this even remotely benefits them? Bro, most people on Social Security are barely getting like $50,000 a year, which at the top, if you think about it, like let's say a couple, like my in-laws, they're getting about, with their investment portfolio and everything else, they're getting about $60,000. Okay. The standard deduction is $29,000, which means that they pay taxes on $30,000, which turns out to be like $2,000-$3,000. Okay.
Right.
Do you really think $2,000-$3,000 is going to make that big of an impact on them? That, that's worth like, oh my God, like let's think that this is a celebration. Like, no, this is, most people that are retired, this is not going to benefit them. But the thing is, this is the kind of stuff that's being thrown in there to basically like, oh look, there's no tax on Social Security, vote for this,
Yeah. Well, April 7th, we still have a lot of the day left. I think we're going to call it there, guys. I'll be live on the market close at 3:45. It's not as bad as it was last night, which is nice to see. But obviously, we're going to see how it plays out towards the end of the day. Kris, thank you for joining. Appreciate your analysis. Chris's Twitter right here in the chat. I'm sure we'll talk soon.
One last thing. I only see all these policies hurting the average person. Okay. I don't see this, like, even though the messaging is that Trump is doing this to help low and middle income people, I think that's wrong. They're actually hurting them the most. And people don't realize it because they're just looking at this and saying, oh, Trump is doing right by me. He's trying to get me jobs. Like, he's trying to bring jobs back to America, trying to give me more opportunities. And I can tell you that's maybe in theory, that's what is happening. But in reality, all he's doing is hurting them and hurting hurting them in a way that it's sort of intentional, but it's sort of not. Like, honestly, I feel like you probably do need to, like, just, I don't know. It's just, it's people are living under this delusion that, hey, just because like there's a tariff in China, that's not going to impact them. Like, no, that's probably going to impact you more than you know.
Yeah, it's affecting a lot. I mean, like Sam made a great point this morning. Tariffs could affect tourism, which could affect Grab. There's your Grab thesis, where like so many things obviously can be affected by how this plays out.
Yeah, I mean,
maybe it works. Maybe this whole thing works. Who knows?
I mean, like I said, the average person, the average small business, this is going to impact them. Okay, if you have a small business making, let's say, some small product and you get your shipments from overseas, now you're going to be paying triple or at least double what you were paying before. And now you as a small business have to figure out how to make things work, And the thing is, that's not how you were, like, you literally have inventory that was supposed to come in at, let's say, $20 a piece. And now all of a sudden it's $40 a piece. And that's what you sell your piece for, let's say $25. You make a 25% margin that covers your overhead and everything else. So you're already not really doing that well. If prices go up to 40, bro, that destroys your entire business. You know,
unless we get all this American manufacturing renaissance and things change, right? Like,
it can't happen overnight.
well, that I agree with as well. It's going to take time for that to play
You
out.
know,
And even if it does happen and the cost of goods go up, it still creates a margin problem, right?
yeah. Oh yeah, yeah. No, this is like I said. This is overall. I don't know. We'll see what happens, brother. Have a good one.
All right, Chris. Thank you. Appreciate it.
Take care.
All right, folks. That's it for me. Warren, thank you for the super chat. He said, I lost some money on that Trump postponed 3-month news. I need quick fingers. It's not just you. There's probably a lot of people that bought that run up immediately as soon as we reversed, thinking that, you know, the worst was done. And then obviously that headline turned out to be fake. Tough day in the equity markets. I'll be back at 3:45 to try to break it all down. Obviously, people are definitely emotional right now. I think the majority of people's emotions are upset around their portfolios getting wrecked. And I don't think you can blame them. But hopefully in the next few weeks, we have a lot more data to see if Trump actually does pull this off or if it continues to be one of the weirdest experiments around tariffs that anyone has ever played. Word of the day is backsheesh. A tip, present, or gratuity. His warmth and a thoughtful bit of backsheesh ensured the bell. Oh, it's a Persian word. I feel like I've heard this word before. Ensured the bellhop handled his bags with extra care. A seasoned traveler understands that backsheesh goes a long way in getting the best seat in a crowded tea house. All right. Well, you know, I think given this portfolio decline, people's backsheeshes are going to not be as friendly when they go out to restaurants. If people still have the money to afford going to restaurants. Oh my gosh. This is aggressive, dude. This is so aggressive. BlackRock CEO Larry Fink says 20% market drop in 3 days has potential ripple effect on clients. Okay, that makes sense. I would imagine that Larry Fink is getting a lot of phone calls, right? Dude, there's probably so many phone calls that are happening to Larry Fink right now because he's Larry freaking Fink. And they're probably saying, hey, don't you actually control the world? Not Trump, BlackRock, which there's a hell of an argument for BlackRock actually does control the world more than any politician. If anyone could get this to calm down, it would be Larry Fink, right? It would be BlackRock making a couple phone calls. But if they can't get things to cool down, then, I mean, who knows? Who knows how this actually is going to end up playing out? One thing is certain, and if anyone has not gotten this yet, let me just say it unequivocally. I'm not selling anything. I've not sold a single thing. I've not sold any options. I've done nothing. I've literally done nothing. So my plan is not to sell. I think we are close to a bottom, even if I'll probably be wrong. I'm not going to be the guy selling down 30%. And like the time to do that was, even on Thursday, was a better time to sell than now. So like to me, that's not my plan right here. S&P 500, 496. But I'm hoping there will be some relief eventually. It's just if it's not going to be that 90-day stuff, if Trump's not backing down from the China tariffs, if he's going to impose another 50%, I think we're probably not going to see any deals until much after April 9th. And then the markets will have to assess if any of that warrants any level of reversal from here. All right, cool. That's it. Thank you, everybody. Hopefully you get to enjoy a little bit more of the day. We'll be back at 3:45. We'll keep going from there. And yeah, what happened to AI, right? Like what happened to the AI trade that was like all those bull narratives just gone now with tariffs. And so I don't think those bull narratives are actually gone, which is why I'm not selling, but they're definitely not that exciting right now, given this volatility. All right. Thank you, everybody. We'll be back 3:45 and we'll keep the coverage going. Bye, everybody. Have a good one.